Hey guys,
Mr. Durrett, how you doing, sir?
pretty good. It's good to be back.
Yeah, it's good to have you. There's a lot to talk about. A lot's happened since our last meeting. Um, but just to give you a little introductions for those who may not know, Don is the author of many books ranging from politics to well-being and, of course, investing in the gold and silver space, including the book titled How to Invest in Gold and Silver, a complete guide with a focus on mining stocks. It is the only book of its kind. And Don, of course, is also the founder and publisher of Gold Stock Data Newsletter. He's well known for his 10 baggers due diligence in the mining space. He's also a contributor to Seeking Alpha. I can tell you that I am personally subscribed to the newsletter, and it's a great resource for me. I have come across some new names and new companies, and I say, gee, I haven't heard of that, so I want to check it out. And sure enough, it's always on Don's list. He always has the details, and so it is quite valuable. So if there's a gold and silver miner, Don knows who it is. He knows who owns it. He knows the investors and what the potential is going forward, what the weaknesses are. And so it's great information. So if you're looking to be an investor in the gold and silver space, Don is exactly the man you're looking for. So Mr. Durrett, what do you think about things?
Well, before we talk about that, let me thanks for the introduction and the overview. That was great. My website, so goldstockdata.com, I have 900 companies in my database. So if you own any miners or if you invest in this, just send me and you're not a member, just send me a direct message and I'll give you a free trial. And the book, if you guys, anybody that owns a mining stock and hasn't read my book, you're going to get something out of the book, definitely. It's a textbook, it's dense of information. So if you're into this space, especially in the mining, gold and silver miners, you want to check out the website and the book. All right, now I'm ready for questions.
Just as an aside, most of the time when you sign up for pretty much anything, whether it's a newsletter or whether it's just any other kind of paid service, it's typically automatically renewed. Don doesn't do that by default. That's off by default. And I think that's just a classy thing, right? So people come back and sign up themselves. It's just one more little thing that I thought, it's kind of a classy move in my opinion. So props to you for that. So Don, let's get started right away. Let's talk about the 400-ton well in the room. I'm sure you saw the article on Zero Hedge. It looks like as much gold was sold. People are buying in volume, and Zero Hedge estimates that 75% of this 300 tons in Q3 2022 was purchased by central banks, just for the fact that no one else really has the capital to make such big investments. So this feels like a pretty big deal. There's a lot of physical being bought up, and it's being bought hand over fist by big players. What's your take kind of on this, these massive moves in the physical market?
Well, I think it's real. I think it's going to increase. I don't think people really recognize where we're heading economically as a country and as a planet, as a world. This is really a change point. COVID was a change point, but not just COVID. It was everything leading up to 2020, which was really a transition from the old economic system where debt was considered kind of a bad thing. I mean, if we go back to even the 1990s, the Republicans were basically really upset with Reagan because, he blew out the debt. And so, I mean, as early, you go back to the 1990s, we were afraid of debt. And then once we got into this century, we kind of threw that out, the whole fear of debt. And so we changed our economic system. And it wasn't just the U.S. It started with Japan. Japan basically had an opportunity back in, when in 1989, 1990, when basically their bubble popped. And their stock market went from 47,000 down to less than 20,000. I don't know how low it actually got, and it didn't rebound. It basically, their economy basically crashed. But their GDP just went flat. It didn't, really go negative. But they implemented a new economic system, which we emulated this decade, this century. And it wasn't just us that emulated. Europe did, China did. and Japan has continued on that path. And so this really goes to you. If you understand gold, you really need to understand the history of kind of recent history of international economics, and kind of what central banks have done, what governments have done, to really get a feel for what's really happening here. The demand in gold, like I said, is just going to keep going on. It's going to just keep expanding. But this is really all about economics. This is about debt. And it's about inflation too.
Yes, sir. And, since as long as I've been investing in precious metals, inevitably there's always a story about COMEX or how much physical is being taken out of the system. You always hear these bullish, the time is soon kind of events. This time might actually feel a little bit different to me. Alasdair McLeod had an article recently. He said that the big move on the price of gold and silver last Friday was due to a massive bear squeeze in the physical market. He was talking about about 1,000 contracts a day standing for delivery, and that was historically extraordinary. It's quite a big deal. What's your take on that in terms of the COMEX and the inventory being moved around? I mean, does it feel different this time? I mean, if anyone has the experience with these markets, it's you. I mean, so in the sum of your experience, how would you compare what you're seeing right now to the past?
Well, first of all, about the COMEX and about the central banks buying, I always think of these as more not really what's really moving the market per se. It's more kind of conspiracy theory. I mean, if you go back to 2007, 8, and then all the way up to 2011, when we got, you never really saw, COMEX really driving the price, driving the physical price. There's no correlation there. If there was no correlation from 07, 08 to 2011, then I personally don't really focus there. I do think that we are going to have shortages in silver. We're not going to have shortages in gold. But I think we will have shortages in silver, which could show itself in the COMEX. It probably will, and it's going to be the first time this has ever happened. But I always look at what are the fundamentals that are really driving the price, and I mentioned that it's all about economics, and focusing on COMEX inventory, and focusing on central banks buying gold. I just think that that's really not the place to really focus your attention. I think that's going to be kind of a lag. In other words, once the price of gold goes up, it'll be, once we have problems in the COMEX, problems with shortages, problems with inventory, that's going to be a lag effect. The price will already have taken off, and then the price will just go higher. But as investors, we want to get in early, and we want to know when. A lot of people don't want to get in too early; they want to wait until it trends. So I focus on what is actually going to drive the price higher. What is going to make the breakout? What's going to cause the breakout? And that really comes down to your macroeconomics. That really comes down to Wall Street basically capitulating on this narrative that we're going to have a soft landing, this narrative that the Fed will be able to pivot and the economy will come back. The narrative that, the Ukraine war and COVID is something, these are events that we can get over. And I think we need to look at those events more so than COMEX and central bank buying. We need to look at the fundamentals. That's really what's going to drive these things up. Now, you said Alasdair McLeod said that there was a squeeze on Friday when we saw gold go from 1616 on Thursday up to close at 1682. And that's quite a move, absolutely. But was it a squeeze? We don't know. I think that was an assumption on his part. It could have just been people recognizing that what I'm talking about, these underlying fundamentals are getting really nasty, and I need to get some gold. More of the fear trade more than the squeeze trade. So I focus more on the fear trade than the squeeze trade. But COMEX, trying to, like I said, that's going to be a lagging indicator. The shortages in silver are going to happen, I think, after we get to $30 silver. I don't think the shortages are going to happen until, say, $35 to $50 silver. And the reason why we're going to get a shortage is because the retail crowd is going to show up in bunches. That's when the people are going to line up outside, stores and these stores aren't going to have any silver. Your local town, wherever you live, they're not having it. It's going to be kind of unobtainium. So there's not going to be any lines. But I guarantee you, if they had silver, you'd see lines. And the people that would be in the lines are people that today don't own silver and today aren't even thinking about buying silver. So again, lagging. If those are all laggers, I want the leading indicators. What are the leading indicators? Right. That's your macroeconomics. That's where I focus.
Yes, sir. And I agree with you wholeheartedly on the fear trade too. I think that that's very underappreciated. Even North Star Charts, he had put out a poll a couple of months ago, and he asked what the next driver in gold would be. And the option missing was the fear trade. I noticed you commented on it. I commented on it too. It does feel really underappreciated to me that just people aren't really considering what might happen and the run to gold, the run to safety. If you just look at what happened on Brexit. I mean, that was a 9% move or something in gold in a single day. It's like this, when uncertainty abounds and unexpected things happen, that's the true catalyst. That's the one that doesn't come back. I'm with you on that one. So would you chalk up the recent movement, especially on Friday, to more noise and, just going through the flow, so you'll get great weeks, bad weeks? Or do you think that, there's something a little bit to it?
Yes. Noise, absolutely noise. We're going to find out in the next 2 weeks here, but no, this is the second big green candle we've had, right? We had a big green candle and silver almost went to 22, and that was, I think, 2 weeks ago. Two massive candles basically in silver. And this time we had a big candle in gold. It's noise right now, but they're omens. They're absolutely omens. But we're not going to break through. We have to get through $22 silver. I mean, just look at the chart. $22 silver that's where we need to get. But it's not going to be easy because we're going to have all this selling pressure. Remember I said, let's look at the macro data. That's what we need to really focus our attention. And the macro data basically says that Wall Street has not capitulated yet on the damage that Powell's going to create. He's going to create a lot of damage. We know that. I mean, he signaled it, right? He basically said, we're not close. We got a ways to go. That's what he said. A ways to go to break something. So we got selling pressure that's coming. So yeah, I think it's noise. I did raise my bottom target on silver from 1750 to 18, but I think I'm probably going to have to lower it again. Next week we're going to find out. Do we get follow through? Does $20 silver hold? Do they try to beat it down? Does it hold? If we close under 1950 next Friday, then I'll have to lower it back. We close above 1950. 1950 is going to probably be around my line in the sand. We stay above 1950, that's probably going to be a good sign because that's $1 over where we need to stay. We need to stay over 1850. So from that standpoint, I'm looking there. I'm looking at the macro data. I'm looking at the technical charts. Let's go back to the fear trade. I think this is important. So if you look at gold, if we go back to 1998, 1999, that's when the U.S. economy was at its peak. That was when the U.S. economy basically, the Fed didn't need to be involved, right? The Fed over there over in left field doing nothing. Basically did nothing from 1993, 4, somewhere in there, because we had a recession in 92, and then they kind of got us out of it in 93, 94. The Fed kind of went to sleep from 94 to 98. And their balance sheet was like under $1 trillion. I mean, they were just doing nothing, right? They didn't have to do anything because that's when we had the technological boom in the 90s. And 98, 99, that was the end, right? Gold was at $250. Then what happened? In 1999, 2000, the dot-com bubble busted. And that's when everything just went south because technology was kind of leading the market. And now all of a sudden technology was crashing. And then in 2001, we had 9/11 and we had a recession. That is when the fear trade kicked in because everybody was going, where do we go? That was kind of a transition point. Where do we go? So the fear trade started then. And I would submit that it went all the way to 2011 because once we got to 2007, 8, people were not sure if the bailouts, Hank Paulson got the Fed to, that's when M&T really kicked in. Hank Paulson had to go to Congress and beg them for like 600, 800 billion, excuse me. It was, less than a trillion, now a trillion, now it's, $800 billion today is pocket money, right? So then that's when MMT kind of kicked into gear, was the Great Financial Recession. And we weren't sure if it was going to work or not. And that's the reason why gold kept trending all the way to 2011, because the fear trade was still there, because people were still nervous. Is it going to happen again? Are we going to roll back into a recession? And once we got to 2011, we peaked. Everybody said, "Oh, we're good." The Fed, that's when the Fed put came in, and the Fed basically said, "Don't you worry, we're going to keep rates low, and we're going to basically inject money, we're going to inject liquidity, and we're not going to allow another recession." So for 10 years, right, from 2011 to 2020, almost 10 years, the Fed basically had this Fed put in place where they basically said, "Don't worry. Anytime the stock market goes down, we'll lower rates and we'll inject money." And that's what they did. So you said 2016 and 2019, the markets tried to roll over and the Fed said, "Don't worry, we got your back." So you had this 10-year period where the fear trade was dead. And everybody has, they don't have long memories. They don't realize how much fear there was back in 2008, 9, 10. And now the fear trade is basically coming back to life right now as we speak.
One thing I thought was interesting in Powell's speech, that for reasonable reasons, because there's other big statements in there that people aren't really talking about. He was asked, "So what happens if you go too far?" Their whole line has been, "We're going to raise rates and we're going to keep them there." Kind of it's like a new year, new me type thing. What he said, and I listened to it a few times now to make sure I heard him. And I'm paraphrasing here, but if we go too far, we would rather err on the side of going too far because we have the tools to support the economy. That's very different than what they've been saying this entire cycle. Like, the problem is, there's two interesting things on this. One, it's interesting because since rate effects have a lag, if they go too far, it's because they didn't know they were going too far when they were doing the hike. On the converse side, if you're going to start cutting and you're going to start doing a QE, nobody's going to ring a bell when it's going to be enough, right? You're going to have to go too far. So they're more or less just confirming, from how I interpret that they're going to make the same mistakes of the past, and there is a Fed put. That's how I interpret it. It's just very low. They're going to panic print, is how I interpreted this, once there's a lot more pain.
Absolutely. I remember that quote, and I thought it was kind of, laughable. So, I like some of Hugh Henry's quotes. He's kind of, very articulate guy. And he always basically says, "When has the Fed ever gotten it right?" They always get it wrong. So the Fed, their basically strategy is to raise rates, pause, lower rates, and then pray. That's kind of their strategy. And, is it going to work? Has it ever worked? Have they ever gotten it right? So you have to realize, and you're spot on there. It's like, wait a minute here. What did they say they're going to do? Is that really going to work? No, they're absolutely going to go too far, and they're going to break something really badly here. As a matter of fact, they're going to break it so badly that it's going to be Humpty Dumpty all over again. Humpty Dumpty's fallen off the wall, and he's not going to be put back together again. The next 3 years, in my opinion, is going to be a transition point for the end of the American era. And something really bad is going to happen between the U.S. and China. It's already starting. So Trump kind of kicked China a little bit, and basically kind of went to war with him over tariffs, because he recognized, hey, we got an economic war with these guys over here. Isn't anybody paying attention? And so Trump put on the tariffs, and he basically said, wait a minute, we're giving these guys a free pass. And then Biden got into office, and Biden, everybody thought, well, Biden will go back to the Obama administration's policies and drop the tariffs. But Biden, I know his basically advice, I don't know who the advisors are, but they basically said, hey, basically Trump had a good point here. These guys are not our friends. And Biden basically kept it on. Not only did he kept it on, he's putting his foot on the gas here. In the last couple of weeks or months, he's basically trying to isolate China's ability to basically get technology, especially these chips outside of China, basically escalating the war with China. And then China this week made a deal with Germany and said, look, let's be trading partners. And Germany said, okay, sure, let's do it. So it's getting really interesting. And like I said, it's kind of a Humpty Dumpty situation here. They're going to break something. They're not going to be able to fix it. I'm very pessimistic over the next 3 years. I've written about this for 20 plus years, what's coming. This is a major inflection point here. And the U.S. is totally in a bad situation because the U.S. is on this side of the Atlantic, all by itself, isolated. And Europe and Eurasia is basically where all the people live, where all the money is. And Russia and China and India and South Korea and Japan, and then all of Western Europe and Eastern Europe are all basically right together. And they're all basically set up for kind of an economic future. And the U.S. is the odd guy out. I mean, I would submit that's the whole reason why this war's taken place here. That war would not have taken place if the U.S. wouldn't have basically would have said, wait a minute, Ukraine, you guys cannot be part of NATO, because if you're part of NATO, Russia's not going to allow it. The U.S. could have stopped. I really think they could have stopped that war from ever happening if they wanted to. But, Occam's razor says they wanted that war to happen. And I can see why they did, because the U.S. is the odd man out here going forward.
Yes, there's a lot that I want to follow up on that. Jim, go ahead first. I know you had a couple things.
Yeah, hello everybody. Good evening. I've got a couple observations, and then I've got a question for Don. Maybe a first question for Don for the night. But first of all, I'd like people to understand as far as what happened on Friday. I was watching very, very closely on December gold and December silver at 8:30 Friday time. And just to refresh everybody's memory, silver made a low September 1st. Gold made a low Thursday morning for the move. So silver has had higher lows since September 1st. Silver's been outperforming. That's one item that I wanted to make everybody aware of. Number two is when the unemployment report came out on Friday, we didn't tick down at all. Gold wasn't doing very much, but we started shortly after the numbers came out. I've got Fox Business on, so I'm watching them real time. And shortly after that, we started ticking up on gold. 50 cents, $1, $2, $3, but we didn't get hit. And we, meaning the gold market, the silver market, didn't get hit, didn't get knocked down, didn't go negative after the report on Friday. Okay. So in terms of performance on Friday's close, the stock market, the Dow and the S&P, they were up about 1%. Gold was up 3.33%. Silver was up 7.5%, a little over that. But copper was the big winner of the day. Copper was up 8%. That's a big move up. All right. My question for Don is, all right, we had a $54 move higher in gold. After the 1:30 close, we continue to trade until 5 o'clock. So $54 in gold versus $1.48 in silver. What I wanted to ask Don is that I realize that $1.48 is pretty important to silver miners, to silver producers, because that's going to start getting some of those folks profitable at $20 and call it $21. We're a few cents shy of $21 on Friday's close. But I wanted to ask Don if that $54 close in gold to $16.85 from the lows on Thursday, if that is more important because we're suddenly the profitable gold mines, they're adding $50, $55 of profit versus the silver mines are maybe adding 50 cents or $1 of profit from being unprofitable to $1. I wanted to get Don's take on how that affects the producers, gold producers and silver producers. Which was more important, the $55 or the $1.50?
Good question. First of all, I wanted to go back to what you said about silver hitting its low in September and having higher lows. Yes, that's what I was mentioning earlier, that silver had those two really big green candles. And that was the reason I raised my low expectation. I think silver is leading out of the bottom here. So I agree with you there. So right now, silver's price action has actually been much better than gold. And I'm thinking maybe that'll hold here if we are potentially holding, so we don't go down, below 18. I don't want to go below 18. If you look at the silver chart going back to say 2011, we've 14 is a really an area that we've touched quite often during the from 2011 up to through, I forget the when, 2016, 2017. I don't want to go down. I don't want 14 to be in the cards. So I want to stay above 18. I really want to stay above 19. So I'm keeping a close eye on that. But yeah, I think silver is leading here, and we'll just see if it keeps going. I think the GSR is broken out on some of these charts because silver has had these big green candles that gold hasn't had. That the GSR is starting to shrink, and it's really starting to show that potentially silver's putting a bottom here. Silver traded around in the 17s, and so that's why I'm thinking the bottom's in there, and so we're going to have a lower low, which he just mentioned, which could be 18 or higher. Whereas gold, I still think gold is going to have a lower low. So gold went to 1616, which was a new 26-month correction, 27-month correction low, cycle low, and I do think gold's going to go lower here. I don't think we've hit the low yet, and I'm hoping that 1550 holds. Potentially, though, we could go down 1450 to 1550. I mean, that's not going to, it depends on how much selling there is in the stock market. We don't know if we're going to get a crash or not. I'm, somewhat optimistic we're not going to get a crash. I think 3,000 is going to hold on the S&P, but who knows? Jeremy Grantham has a target of 2,500. So if we crash all the way to 2,500, no way to 1616 hold, I don't believe. And we're probably going, if we go to 2,500 on the SP, we're probably going down 1,500. So we have this downward pressure in the metals now. So it's somewhat irrelevant on, who it's helping more. So for silver, I think the average break even for a silver mine today is around 21, which is nasty. Prices of cost have really risen. So the average is around 21, and so there's not that many companies that are basically making a ton of free cash flow, at 20. There's some, there are a lot of mines, 18, 19, 20, but the average is probably around 21. Gold has really jumped. The average cost of gold has really jumped. I would say, before COVID hit, the average was around 1,300. So we had some really good margins. Now I think the average has jumped to 1,500. So we basically tacked on $200 an ounce. Barrick and Newmont came out, and they're both around $1,400. And they're kind of one of the low cost producers. They've jumped from $1,000 cash all the way up. They're higher than that right now. $1,000, about $1,100 cash. They were always below $1,000, prior to COVID. So right now, the margins aren't that good for the gold miners. About $100, $200. They're not that great. They're okay, but it's not a pretty sight right now, both for the gold miners and the silver miners, because the cost have really jumped.
We got a follow-up for you there. I know you read the charts and the technicals. Since the prior pivot low on September 24th, AG's up 8%, Hecla 40%, Mag's up 40%, Silvercrest 18%, And if you even look at the ratios, GDX beating tech by 17%, it's beating the DXY by 18%. It has beat the S&P by 12%. It's losing to oil by close to 9%, but beating uranium by 11%. It's flat against copper. It's performing very well relatively to other things. So my question is for you is, if we get this dump, if we get lower prices in the metals themselves, where do you see equities going? Because in my personal opinion, when I'm looking at the charts and the patterns they're putting out there and the levels that we're at now, I'm not sure that we make new lows from those September 24th lows. Do you see it any differently? Because I see a similar situation that I had spotted in uranium, where I had noticed some confluence trading with the broad markets. And I knew that we were getting a massive leg up at the time, so that when the broad market sold off again, these uranium equities could sell off with it without breaking their bull trends. I think we're getting something like that, in my opinion, where even if we get this sharp sell-off, we still won't break our bottoming patterns that we're kind of forming in a lot of these big names. What say you?
So I agree with you that the price action has been very good since late September for silver and the silver miners. However, until we get the capitulation selling in the general markets, which we haven't gotten, if you look at the volume, we have not had a high volume day since this correction in the market started a year ago. Go back to October of 2021, all the way till now, there's not been one single high volume day, not a single one. So we have not had the capitulation selling yet. So what I think, I always say, buy to the bottom, but, always while you're buying to the bottom, you want to make sure that you keep a little bit of powder for certain expectations. So for me, I think the expectation is that the S&P 500 is going to go to at least 3,300. And I think 3,300 is actually a very conservative area. But what I think we should do is wait for the S&P to get to 3,300. And there's a lot of selling that has to go down. We're at 3,770 right now. So we got to go, that's more than 10% to get to 3,300. So that's some significant selling. And most days you only go down 50 points on the S&P. So that's like 2 weeks, 3 weeks of selling on the S&P. That's a lot of selling pressure. So let's wait until the S&P gets down to 3,300, and then let's see how the metals perform during the selling. If silver can keep its head up during that massive wave, that first wave of selling, then we'll know the bottom's in. We'll know we're really close. But if silver and gold get pounded down, then we'll have to look out below, because then we could go a lot lower, right? So right now, I'll give you an example. So we've seen the HUI just go kind of all over the place. It was up 15 points on Friday, which is, that's a big move. It closed at 199. So let's say 200, right? So it went from 185 to 200. I mean, that's a really big move. But it can do the same thing on the downside. We're at 199 over a 3-week period of massive selling in the S&P. You could be down under 175 easily. And depending on where you land, let's say you land at 170 or the high 160s, then you still have another 10% down that you could go. You go from 3,300 all the way down to 3,000 on the S&P. That's another 10% move. So if the metals get pounded down here, this initial wave, then they're going to get pounded down again. You can just count on it. So the first wave is going to be the important wave. So I basically say, before we start, thinking about breakouts here, realize that we're going to witness some heavy selling here in the markets, probably in November, after the election, because one thing Wall Street has to start doing is basically moving their earnings down. Their earnings right now is about 225, which is ridiculous. It's just that is not recession number earnings. So they have the earnings for the S&P 500 at $225. It's just, to me, it's ridiculous. It's like they're not even expecting a recession. So earnings have to come down all the way to 200. So that's a 10% move, minimal. And I think it's probably going to go down to 175 to 185, which is another 10% move. So that's nasty. So the stock market is going to sell off hard. It's coming soon, and the miners and the metals are going to have a hard time basically fading that selling pressure.
We had some other macro markets do pretty good on Friday. Palladium and platinum. Crude oil had a nice move. Even the Brent crude oil. Crude oil was up over $4 on Friday. And part of that might be that there is a little bit of news that's starting to flow out of China that things may be relaxing a little bit on their COVID lockdowns. If that's the case, as I say, S&P and Dow were up about 1%, but they were outperformed vastly by metals and by crude oil. So if part of it is China, and they do start, opening up a little bit more, that could be a macro signal as well, Don, to help things out on the upside.
Right. So I'm very bullish for commodities. I think we're in a commodity bull cycle. I've been saying that this is a fake out for like copper. It went down to like $3, $3.20. So that's a fake out. It's going higher. I think it's going to go to $5, $6, $7. Maybe in the next 12 months. So I think commodities. I think oil is going higher. I'm very bullish on commodities here. Basically over the next 2-3 years. But when the initial selling comes in the markets, gold and silver, I think both of them are not going to trade like commodities. They're going to trade like, everything's basically going to get sold off. Copper and oil, they might basically fade it a little bit, potentially. I don't know, copper, because like you said, China is basically, and Asia are probably, if they don't go into a recession, they're not going to go into a hard recession. There's some pent-up demand in China. So the commodities are probably not going to crash as hard as the U.S. stock market does. But don't count on commodities to hold up gold and silver. Now there's a chance here that gold and silver could get a bid because the fear trade is kicking in, and silver makes a run here. But that's not where the odds are. That's the outlier. That's the smaller. The odds are not great. That silver does a follow through here and gets above 22. And basically, remember I just said we're going to see some hard selling coming here in the markets. This is the capitulation selling. This is when you're going to get the high volume day. This is when Wall Street's going to throw in the towel of this whole this soft landing theory. This is when Wall Street's going to throw in the towel on these earnings. They keep saying that nobody's giving guidance for 2023 earnings next year, and they're not going to give guidance until January. But I don't think they can wait till January to recognize that earnings are going to be much lower. Once Wall Street realizes that earnings are going to drop from 225 to 200. We're going to 3,300 on the S&P. That's going to be some serious selling.
Yeah, I think Don said it well, that I really think this is a tough market at the time, right? I think that if you believe in the long term, you got to have a core position. If you want to be in this space for the next 5 years, you should probably have it soon if you don't have it already. But it also makes sense to have some dry powder because the future is unknowable. If you look at the last 3 major recessions, so COVID, gold, silver, and S&P 500 bottomed together, like within 4 days. Within the GFC, gold bottomed and silver bottomed within days of each other, maybe a couple weeks, about 4 or 5 months before the S&P 500. And the tech bust, gold, I believe it was 11 months before the GFC, before the S&P, and silver was somewhere in between. I linked a thread with some charts on this where I kind of timestamp all of these things, but just nobody knows. Like gold and silver could bottom after the S&P 500 this time, but it's a tough market, and for all we know, silver could take off before broad markets bottom, or it may happen the exact same day. I have no idea, and I don't think anybody really does. So a core position, I think you just have to do it if you believe it in the long term.
Right. Go ahead, Don.
Just quick one. So he talked about, gold and silver, gold bottoming and the markets bottoming. If you go back to 2008, the S&P bottomed in September and gold bottomed a month later in October. Very, very close to each other. And I think that's what's going to happen here. I think silver already bottomed in September. I think it did. But I think that the markets are going to bottom and then gold's going to bottom. But they're going to bottom very close to each other. So I mentioned that. So go ahead with your question.
Well, I just had an observation or a statement to make that gold on Thursday, gold was $450 off its high. The high was, call it 2080, and now we're $400 off its high. At the same time, I believe, my personal opinion, my informed opinion on the dollar, I would be more apt to be in agreement, in total agreement with you, Don, rather than partial agreement, if the dollar was 95 heading towards 115. We hit just shy of 115 in the last 2 months or so. And if 115 is it, and we're on our way down to 105, 106, 105 and lower, then I think that gold can do better from here.
Yes, I think that 106, I mean, if you look at the technical chart, I think 106 is the number. Once we get below 106, I think the top is in for the dollar. So right now, I don't know if we're going to go back and retest 114. I think it's possible. I don't know if we're going to. But once we get below 106, I think that's when gold runs. So that's an important number to watch. The other important number is the GSR, of course, which I think is pointing to the silver breaking out. I want to talk a little bit about positioning because I think a lot of people are interested in that. So positioning your portfolio, do you buy now? Do you wait and for this market, you wait for the capitulation selling so you get basically some better entry prices? Or do you even wait longer? Number three, you wait until you're very confident that the bull market starts running again. So those are kind of your three options, and everybody's a little different. But I'll tell you the best. I mean, people that are very risk averse. For me, I'm not very risk averse because I'm very confident that we're heading to $3,000 gold. So my whole mentality is we're going to $3,000 gold, and the GSR will go down to 30. So silver is going to 100. So I'm basically 3,000 gold, 100 silver, and that's how I invest my money. I'm on those prices. And so I'm always buying, basically looking for opportunities because I know if we hit those numbers, if I buy quality miners, I'm going to do really well. But people that are more risk averse, the best entry, in my opinion, by far, is when the next run starts. So when does the next run start? Well, the next run starts once silver gets above $30. So if you go back and you look at this 27-month correction that began in August of 2020, we never got to $30. We got to $29.75, I think. So once we get above that, once we get above $30 silver, that's basically going to be the signal that silver is going to go on a run. And if you look at the technical chart, there really isn't a lot to stop it from going to an all-time high. So the run from $30 silver to $50 silver is going to be epic. And that's where you want to make sure you're in. So you can just wait, I'm just wait for $30 silver. But the key here is gold has to really lead. Silver is going to lead off the bottom. But when silver gets to 30, you want gold to already be ahead. You want gold to have confirmed. Now, where do you want gold to be? You want gold. Now, gold went all the way to 2075. You mentioned, I think, 2080. I like 2075 as my high. So, but we don't have to wait all the way there. I think 2050 is going to be fun. I think that is the number for me. Not necessarily 2000, but 2050, right? Once we get 2050 gold and $30 silver, once both of those events happen, I think the coast is clear. I think that's when you can basically get really aggressive with your positions.
Don, just one bit that to ask you to recall, during that silver squeeze of February of 2021, a year and a half ago now, we did actually hit $30 and about 20 cents intraday on the futures. If you're looking at a spot quote, maybe we never hit your $30 that you're talking about. But we were in that period of time, we went up like $3 in that week,
Yeah.
down $3 that same week. But we did breach $30 and like $30.30 approximately.
Yeah, the futures tend to trade a little bit more than the spot. Spot never got to 30. Good point.
Alex had his hand up. He's got a question, but as a quick follow-up, while we're on the topic here, I've noticed an anomaly in the charts, Don. I want to see if you have any opinion on this. And that anomaly is First Majestic, AG. The month of October granted First Majestic its fourth most volume in its entire history. The only time it was outdone was in January, February of 2021, as well as July 2020. And the volume continues to ramp up month after month. It's been ramping steadily since July, and already in this first week of November, it's on pace to keep going. What's going on with AG? It is standing out all by itself. The volume is incredible. What do you think that has to do? Why is AG getting so much volume compared to everything else?
Because it's an anomaly, and the reason why it's an anomaly is because they had problems at Jarrett Canyon, and so they had serious problems at Jarrett Canyon, and Jarrett Canyon basically beat up the stock. I forgot how low it go. I don't think it got to $5. I think it got 6, and it got beat up. And so since it got beat up, everybody has had their eye, and everybody got rid of it and sold it. But then everybody had their eyeballs on it, basically waiting to see if Jarrett Canyon was gonna get fixed. You have to realize that First Majestic is actually a growth story here. It's a total anomaly. So First Majestic, they are actually expanding production next year in 23 and in 24. And their AGEQ, their target for 2024 is just a big pop from here. So you basically have this unbelievable leverage. So you have a company that's basically very, very cheap, very, very oversold, that's adding production in 2023 and 2024, which gives them even more leverage. So it's like double dose leverage, right? And then on top of that, they've basically made an announcement like midsummer of this year saying that they're fixing Jarrett Canyon. They basically made an announcement that they were going to expand production in Q4. They were going to expand drilling in Q4. And they're basically just signaling, hey, we're not worried here. We think we got Jarrett Canyon fixed. And then they basically came out with just a massive drill hole like last week or something. I think it was like 20 grams at 20 meters, something like that. I mean, it was a big hole. It was a very wide, high-grade hole. And this is a company that knows what they're doing, right? So when they find a discovery of that size, that means they're going to basically drill it out quicker than the average company. They're going to be able to turn that into production. And they even made a comment that it's close to the mine, right? It's like, don't you worry, we're going to mine this stuff pretty quickly. So First Majestic is really starting to turn a corner here, but the key here is the price of silver. I think Jarrett Canyon is basically going to have a break even of 1,600, somewhere in there. I don't think it's going to be maybe 1,700, but I think it's going to generate free cash flow fairly soon. They might even get it under 1,600. But I think they're going to basically fix Jarrett Canyon and create some leverage there. But Jarrett Canyon is not going to be a problem mine for them, I don't think, for much longer. I think by first quarter of next year, I think they're going to be generating free cash flow, and it's no longer going to be a problem. So then we look south to Mexico, and like I said, they're expanding production in 2020, 23, 24. And so if the price of silver gets to $25, suddenly First Majestic looks unbelievably cheap, for a company of its size. So let me look at the numbers here. So currently has a market cap of 2.4 billion, which is fairly cheap for where they're going. So I'm only valuing them as a 40 million ounce AGQ producer, but they're giving guidance at 45, and they're currently at 34. So that's 20% increase in production, which is significant growth. So this is where it gets kind of freaky. For a company of their size, they print as a 10 bagger right now at $100 silver. A 10 bagger. So a company of their size, they're stupid cheap right now. If the price of silver jumps to $30, First Majestic doubles. And then if it jumps and then it goes to 40, they double again. And then it goes to 50, they double again. That's some crazy stuff right there. That's the reason why that's why you have all that volume, because this company is just leveraged to the hilt right now.
Don, I got to just mention a little bit about leverage, I guess. And I sent you, we traded direct messages past week. Silver, the futures contract right now, the margin is $9,300 for a 5,000 ounce contract. And so 5,000 ounce contract, every dollar you make, every dollar goes up as 5,000. So silver futures right now, you double your money every $2. Every $2 increase in silver, you double your money at the current margin.
Wow, that's crazy. Okay, so yeah, so what you're saying is very true. That if you basically get if you control 5,000 ounces in the futures market, and you have to do this through margin, you basically cannot afford to put all the cash up for 5,000 ounces of silver. So you basically control it with margin, with a small chunk of money. And then if the price of silver goes down, you have to pay more margin. It goes up, you don't. It gets really risky. And that's the reason why you have this huge leverage, because there's a lot of, right now, if you do that, you're going to have a ton of risk, because the chances of silver going lower with this selling is massive. So this, I mean, you talk about it's high leverage, but it's very high leverage risk. But where it gets really interesting is once silver breaks out to the upside. So like once silver gets above like 27.50, 28.50, right in there, that's when this type of a trade can really make sense. Because if you get in and you start controlling 5,000 ounces of silver, and then silver jumps to like 30, 31, 32, you can ride it. You can ride it all the way to 50. You can make a bunch of money. But right now, the risk is super, super high.
Yeah, my viewpoint as a futures broker is a little different than yours, Don. I kind of look at on my analysis, I look at a risk reward right now, and I will grant you your numbers, $26, $27. But on the downside, I will also grant you your numbers, but I'm not as bearish. I'm not a $16 or $17 guy. We're done with that in September of this year. So I can see now we're at $21. I can see $2 lower, down to 19 maybe, but I'm going to grant your $5 or $6 up. So a risk reward of $2 risk for a $5 reward, that to me signals it's a trade worth looking at. And then I've got another ability to sell a call option against the futures contract to hedge that risk a little bit by the amount of the premium that you collect for the call that you sell. And if you do that in 30 days, 50 days, 60 days, 70 days, something like that, you can do that multiple times. So that was what I was getting at when I sent you a DM earlier in the week.
Right. Yeah, the offsetting call makes a lot of sense today, and not do a naked exposure to the downside. But yeah, you said 19 is kind of what you're looking at as a floor, and I'm looking at a floor to 18. But if somebody did a trade like this naked and things kind of went south, you basically could get in big trouble if we went to 14.
Yeah, Don,
big trouble.
I agree with you, Don, but you're only in big trouble until the market comes back. If it takes 2 or 3 option cycles, 2 or 3 2-month deals or something like that. And again, I'm in total agreement with you at $25, $27.
Let's be very transparent here. you have unlimited exposure to the downside when you do a future trade like this. So yeah, you're right. If you have unlimited margin, if you have a ton of money in your margin account and you're willing to hold it and go all the way to 14, I don't think we'll go lower than 14. But I mean, it's not inconceivable that you could have an intraday trade all the way to 11. So if you went all the way to 11 in silver, could you imagine how much money you'd have to come up with? That's the kind of exposure you could have. But then, like you said, you could offset it with a call.
I understand. Or the other thing is, if you're looking for that much downside, you said 11. Then you said 14. Before that, you said 17 or 18. And I agree with you. I'm certainly wrong if we start taking out the low of September. Okay, but I'm early. I guess I'd call it early, not wrong.
I think your trade is a little risky at this stage because of all this selling. But once we get down to 3,300 on the S&P, that's number one. That's going to basically give us a really good idea of the bottom. And then number two, once silver gets above 22 and stays there for like a month, at that point in time, the downside risk of this type of a trade really increases.
Yeah. Once again, I like to buy cheap, position lower, because I think there's less risk at $20 than there is at $26. $26 say that, well, there's risk to down to 20.
Absolutely. I'm talking about the people that are listening, right? Some people that don't quite have the risk tolerance that you have. They have a little bit better risk tolerance. I'm saying that those two things come into play once we get to 3,300 on the S&P, and then silver trades above $22 for like a month. Then this type of a future trade would be, the risk really improves. And then once we get above $30 on silver, the risk improves tremendously. So those are basically three options that people have. Do it now, wait, and then wait again. But yeah, it's been good. I think good discussion.
Hey, I just wanted to jump in on the futures thing. Oh, did you want? Yeah, sure.
Hold on. Alex has been patient for a long time. We got to.
I apologize.
That's okay.
Sorry, guys. I'm feeling kind of sick today. I'm sure you can hear it. I know it rebounded a little bit, but I don't know if you had any thoughts on Sandstorm, and they had just a really big fall. I don't know if there was anything special that you saw about that company, or just like what the reason was for it in your mind.
Yeah, they really made a mistake. I think they raised, I think, like $80 million, and they misjudged their customer base, their investor base. Their investor base basically didn't have the appetite for that, and so it sold off. They made two mistakes. They bought a mine basically, and I think it was in Turkey, which their investors didn't really like. And then they got rid of it because they realized it. And then they did this. They should have borrowed money instead of basically diluted. Their investors are okay. Their investors would have no problem if they would have borrowed money, but they didn't like the dilution. So now their investor base, they've kind of lost, that real confidence level that, say, like a Wheaton has. My favorite royalty company is Wheaton, because Wheaton hasn't made these kind of mistakes, and Wheaton has just as much leverage, I think, as Sandstorm does, and I think Franco's a little kind of pricey. So Wheaton is I think is really the kind of the cream of royalty plays. I like Wheaton a lot here, and so Sandstorm. I used to like Sandstorm a lot, but now they made two mistakes. If they make another mistake, oh gosh, that would be nasty. They probably won't. They probably now figured out the problems. But what could happen to them is they could have bad luck. Like one of their mines that they get a lot of royalty from could maybe shut down. And if that happened, they get hit, and people would basically say, screw this, I don't want to own that stock now. Basically 3 strikes you're out kind of scenario. I don't like to own stocks that kind of have that type of the risk level really starts to increase, especially when you're talking about royalty plays that are supposed to be low risk, right? So Sandstorm no longer has the kind of low risk I think that Wheaton has, although even Wheaton could get hit by one of their mines basically going down. That's always a possibility. But I think Wheaton is going to be a really good hold here from say from now until silver gets to like, you know, 50, 60, $70. I think it's going to be a nice hold. I don't own Wheaton. I wouldn't mind owning it. I think it's a, you know, 2-3 bagger all day long to hold on the way up. And I really like the dividends. I think the
I thought you said you owned like hundreds of stocks though.
I don't own any royalty. Yeah, I have about 150 stocks, but I don't own any royalties. And the reason why is because I'm long term, so I never, you know. And royalty plays are more 2-3 baggers. They're like, it's like owning Barrick or Newmont. You know, is it going to outperform Barrick and Newmont? I'm not sure. Those are kind of the top of the food chain. As far as, you know, quality, are you how much money, what kind of return you're going to get. So I don't own Barrick or Newmont except for in my mutual funds. I have 3 mutual funds where I own the majors, but I don't own them individually, and so I don't own them. But if I wouldn't mind owning Wheaton, I think Wheaton's a good name here.
Don, since you said 3 strikes and you're out, if I could be doom and gloom and add 1 more strike to Sandstorm, these guys were buying stock back at a much higher price back like in the first quarter, and then they went and diluted shareholders at a lower price. Like, when a company's business model is literally taking your capital and allocating it, it is a red flag. But I'm with you. I think Wheaton is so good. I mean, why would he go anywhere else?
Yeah. Hey, we agree completely. And I like it. I like the point you just made about them buying back their stock. Yeah.
We are the first hour in. Donis promised us 2 hours. He has the best phone battery in the world. We sometimes go 3 to 4 hours. But we are at the 1 hour mark here. So with that, I would just like to remind everyone, if you haven't followed Don yet, please do so right now on Twitter. He's one of the best resources in the entire space. And just as a reminder of formality here, we now have 8 speakers up right now. So if you could, just please raise your hand when you have a question. That way we can get to everyone in order. And any other speaker up on stage, please be mindful and keep a lookout for other hands so we can keep everything orderly. And with that, Hutch was next. So welcome up, buddy. What you got?
Yeah, thanks for having me. Yeah, I just want to revisit the future things. I did a couple calls with Jim to understand the strategy, and it does seem compelling. I agree with Don that you know, it is a leverage trade, and so even though you're only putting up 9,000 or 10,000, you're essentially controlling at this point $100,000 worth of silver. But I actually referred a client of mine to Jim, and he's now doing business with them. And what he got comfortable with is the fact that if he was long the future, and even though he sold the offsetting calls, if it does go down to whatever, it prints an 18 or a 17 or a 16, worst case scenario, he was going to essentially take possession of 5,000 ounce bars without any premium. And correct me if I'm wrong, and I get that it may go lower, but if you're bullish long-term anyway, and you, assuming you have the cash and you're prepared to be a bag holder, or you're prepared to be a 5-bar holder, I mean, there's really no downside that I'm missing, correct?
Yeah, if you have the money.
Right.
5,000 ounces is a lot of ounces to hold. Yeah, if you have the money, then you're right. You can take possession. You're right. Your risk is somewhat limited, and from that standpoint, you just have to keep putting the cash in. But a lot of people don't have that much money. But yeah,
no, for sure.
You're right. It's basically a very interesting trade if you have that kind of money. And then the other problem, which I think is very significant, is it's not easy to take delivery on the COMEX. They won't deliver it to your house. You have to go to a COMEX warehouse, and not only that, but you can't do it by yourself. You cannot basically call somebody on the phone and say which warehouse. You have to work with a separate broker. Before you even do this, you have to set it up with a broker who agrees to do it, agrees to allow you to take delivery. It's not an easy thing to do. You can't do it by yourself.
No, it's true.
If anybody says, "Oh, I'm going to do this and then take delivery," you got to have all your ducks in a row before you even think about doing something like that. First, you got to find a broker that'll do it. That's done. You know, someone who's done it before. That's not easy to find. And then you got to live near a warehouse to go take delivery. It's very problematic.
Yeah, I found out my online broker won't allow me to take delivery, but I believe Jim does. Correct me if I'm wrong, Jim. Don, as long as you're here, and thanks for doing these every couple weeks. You know, you're bullish long term. on metals, so am I. I understand that you get some leverage if things go well on miners and whatnot, but if you think that there's this much selling coming, and I think it's probably coming too, is the extra pressure and just inflationary pressure on labor costs and diesel and everything else, does it work the same way, almost like we're talking about with futures? Does that if you're holding a lot of miners, that it's going to be compounded negatively if we go to the downside, albeit if we don't or when we bottom, you'll get a bigger pop at the miners? I just want to hear you weigh in on that versus just, owning some physical funds or not doing the companies, but doing the physical metals themselves.
It seems like in the last hour, it seems like every question you guys ask me is pertinent. I mean, these are really good questions. These are questions that I've thought of myself recently. Yeah. Okay. So if inflation goes up, then your leverage basically goes down. You were expecting a 5-bagger, and now, you're probably not going to get it because their margins aren't going to be as high. And that's true. It's nasty. And so, you basically you've taken all this risk, and now you're not going to get rewarded, or you're not going to get rewarded as well as you thought you were. That's a bummer. I mean, there's nothing we can do about it. We didn't anticipate inflation, going this high, and inflation, hitting them across the board. I mean, it's not just diesel prices. They're getting hit across the board on these things. Another thing that's nasty is the CapEx. The CapEx prices have really jumped. I did an analysis of Montage Gold. This company is valued at $41 million. They have, a 3.4 million ounce reserve project, but the CapEx is too high. They can't get the financing on it. So this is basically a 200,000 ounce to 250,000 ounce mine, and they're valued at $41 million. They have a strong team, very good team, that knows how to build mines quickly, knows how to do it all. And yet they're valued at 41 million because they can't afford, no bank's going to loan them the money to build a mine, $500 million CapEx. It's just, a small company can't raise that kind of money. The big mid-tiers can, but not a small development company. And so, here you got this investment and it's going nowhere. It's just spinning in place, and it's probably going to spin in place for a while, So we have a lot of these development plays that aren't going to perform that well as the price of gold goes up because of the increase in inflation, the increase in the CapEx. CapEx is just killing these development stories. That's there. Then you have your producers who aren't going to have the margins that we thought they were going to have. So they're not going to perform as well. It's like, wow, we've taken all this risk and we're not going to get paid off. That's nasty. But there is one silver lining here. And the silver lining is how high the price of gold and silver can go. Once we get, up in the stratosphere, I think the margins are going to take off. And so I think we will get paid. It just depends on how high gold and silver go. But in the near term, it's kind of nasty. That's all I can say.
Thanks.
Sure.
Austin, you're up, buddy.
Yeah, so I think the big story from Friday that kind of got overshadowed just because there's a lot else to focus on was that deal with Pan American, Agnico Eagle, and Yamana. So one, could you just, if you've had time to take a look specifics of the deal, do you think this is positive, negative for Pan American, Agnico? And two, do you think this says anything about how investors in this space are viewing acquisitions and M&A at all? Or do you think it's deal specific? Because we all know what happened with M&A in the last cycle.
Yeah, another great question. This is an important deal. So when Yamana got taken out by Gold Fields, I thought it was a done deal. I was really disappointed. It's like, whoa, wait a minute here. Yamana is basically a Western gold miner, and here we have kind of a South American company coming in and stealing these mines. I wasn't really happy about it, right? Because I own Gold Fields in my mutual funds, but it's not a company I'm going to own, and it's not a company a lot of retail investors are going to own. But we like Yamana, right? Yamana's like 3 to 5 bagger possibly, at least a 3 bagger. We liked it. Yamana was just kind of a solid company with a lot of good properties. So when I heard about this deal, I'm going, this is great. I own Pan American, I own Agnico Eagle. It's like, yeah, I want those Yamana's properties. Those are some really good properties. So let's split them for companies that I own. So I was really excited about it. The market now, Agnico Eagle, basically, they have tons of cash, and they basically they're not a super low cost producer anymore. They were, but it's jumped on them this year, but they're still, have nice margins. And the market was like, okay, you can buy those. We don't have a problem with it. And then Pan American's shareholders went, whoa, we don't like this. You guys are not performing that well right now. We don't want you to do any dilution. We don't want you to spend any cash. And that kind of harkered back to the problems that a lot of companies have had over the last 2-3 years of trying to buy companies. You look at Fortuna. I mean, Fortuna got obliterated when I thought they did a great deal when they bought Rox Gold and acquired 2 fantastic gold mines in West Africa. And they just got obliterated. I mean, and these are really 2, you talk about high quality mines. I mean, basically very economic. You're looking at $1,200 all in, or $1,300 all in, even with inflation. The mine they're building right now, adding 140,000 ounce production. I mean, it might be as low as 1,200 all in. And yet, Fortuna just got completely obliterated when they made that deal. So M&A, investors have not been open to M&A. But I think this is the time you have to do it. You got to buy these companies during corrections. You don't want to buy them during bull runs. You don't want to buy them when they're pricey. You want to buy them when they're on sale. So, this is actually a lowball offer. Gold Fields basically said, our offer is better than theirs. I don't know if any of you guys saw that. But Gold Fields actually had a news release after and said, we're keeping our offer where it's at. And as a matter of fact, our offer's better. So basically, Yamana and Agnico Eagle are making a kind of a lowball offer here. But I think that the shareholders have to take it. I think they have to take the Pan American Agnico deal. And the reason why is because it's a better fit for shareholders, right? The shareholders don't really want to go and partner up with a company in South Africa, right? They want to partner up with companies they know, companies that are in Canada, right? Companies that are in, Western, hemisphere, North and South America. So I'm excited about it. I hope it goes through. The one thing that's great is that Pan American and Newmont, and Agnico, they don't have to up their offer here. So, and I think shareholders are gonna take it. It just makes more sense to them. I mean, it's a JV partner. I mean, their biggest Yamana's biggest property, they have a JV with Agnico Eagle, right? They're already partners with them already. So it makes more sense for them to do the deal with Agnico. And I think the reason why Agnico Eagle made this deal is because they're already a JV. Like, I don't want to be a JV with Gold Fields. Let me just buy them out. So I think there's going to be a lot of M&A coming. As a matter of fact, the last 2 months has been the slowest M&A we've had in 2 years. I track M&A. M&A's been like three deals a month for the last 2 years. In the last 2-3 months, it's been dead. So I think the M&A is going to really pick up next year, and I think it's going to really pick up as gold prices trend higher.
Don, let's stay on subject here of dynamics in the gold and silver space. I'd like to ask you about the recent sanctions in Nicaragua. They were specifically targeting their gold miners. Gold was Nicaragua's main export last year. 79% of that gold came to the United States. The U.S.'s official position is that they're essentially sanctioning Ortega and his continued attacks on democratic actors and members of civil society, unjust detention of political prisoners, etc. I also subscribe to Jordan Roy Byrne over at the Daily Gold. He kind of read between the lines. He thinks that this is more along the lines of Nicaragua's Russian ties. The question is, You see what happened in Chile with Rio 2 and now Calibre. I'm just wondering if the way we need to view jurisdictional risk is changing, and if there are now new elements we need to start considering in the jurisdictional arena.
Fantastic question. So I did not. I owned Calibre and Mako Mining, which were both in Nicaragua, and I sold them both. And the reason why I sold them both is because I just thought that somebody printed something that really kind of got my attention. They said that Calibre was going to slow down their expansion in Nicaragua. And I didn't like that at all. It's like they were basically going to say, okay, we're going to slow down our expansion and we're going to start kind of diversifying out of here, because I thought Calibre had great expansion potential there. So there was that. And then the other one was, I thought there was investors were basically going to stay away from Nicaragua. And so if that's the case, then you're not going to get a big multiple. And so you're not going to get the returns that you expected. So I traded Calibre for Adriatic. I didn't own Adriatic Silver. I had it on my buy list. I'm like, that's a good trade. So I was up. My Calibre was actually up, and I just said, I'm just going to trade it for Adriatic. And then I got out of Mako too. So those are my two mines in Nicaragua. And I just thought that, number one, I thought the U.S. was not going to back down on their sanctions. I didn't think that it was negotiations. I thought, that these sanctions are going to stay in place. And so from that standpoint, there's a possibility, it's a long shot possibility, that Canada basically says, hey, we're going to put sanctions on you too. And so most of these companies are Canadian companies. So if Canada decides to put sanctions on Nicaragua, that would be bad, right? So there's that one. But the main reason that I basically decided to get out was that, number one, I thought that Calibre was going to slow down their expansion in Nicaragua. And then number two, I thought that investors were not going to basically be buying Calibre going forward. Would get they're not going to get the kind of multiples that I want to see them get. I want them to get a 15 multiple at least, and they might get stuck under 10. And so, I just decided to run from Nicaragua. I don't have a problem with South America. I like Bolivia, for instance. I don't have any problem with Bolivia at the moment. I like Brazil. I like Guyana. I don't like Ecuador that much. It depends where you're at. Colombia, I don't have a problem with Colombia. I own a few stocks in Colombia. It makes me a little bit nervous because, the new president there, they put the person who's the mining minister is basically anti-mining, which is very, that's not good. It's a woman that comes from the academic field. She gave a speech recently that was basically negative towards mining, basically saying that we're going to, crack down on anybody that does anything, that's not environmentally friendly kind of thing. And she basically made the intentions that, look, if local communities are against the local mine, give me a call and I'll help you out. That's kind of what she said, that I'm going to work with the communities more than with the mines. So, Colombia makes me a little nervous. Aris isn't doing great right now. I'm shareholder in Aris because Aris is Gran Colombia, but they renamed themselves Aris after they bought out Aris. And Aris was a spin out from them, the Marmato mine. And so, Aris, I have big, expectations there in Colombia. The three countries down south, you got Argentina, Chile, and Peru. They all make me nervous. I don't think I'm going to be adding down there. I do own a few mines. I was really disappointed in Rio 2. Rio 2, basically, that's an interesting story, right? I mean, they looked like the permits were supposed to be done locally. And the new Chilean government basically changed the rules on them. And basically the central government got involved in their permitting. And the central government shut down their permit based on 3 small animals in the area. Basically said that they had to protect these 3 small animals. Well, we know that's all a bunch of baloney, right? It was totally political. They basically shut down the Rio 2 mine. I think all three of these countries, the risk levels increased. Hochschild, I own Hochschild. Hochschild's having some trouble down in Peru with their largest mine. They're trying to expand it, and the local community doesn't want them to. So, all three of these countries have higher risk. So the risk levels have really increased in South America and Central America. And I just think that Australia and Canada just make a lot of sense now. I think the multiples are going to be really high in those countries as we go forward.
I appreciate the robust answer there, sir. Jim, get your hand up. Go ahead.
Yes, sir. Don, could I please ask you, Liberty and his two co-hosts, Alex and Austin, had us spaces 2 weeks ago, and I granted everybody that night 2 weeks ago my early Christmas present to everybody by offering a little bit of information on FFMGF, First Mining Gold. And I remember I had asked you about it probably a month or 2 months ago, the last time you were on with Liberty in the spaces. And could I please just ask you to give us maybe 30 seconds or 40 seconds on a 15-cent stock that I think that with Keith Neumeyer and Dan Wilton owning big numbers, big volume of shares, that kind of demonstrates to me their commitment to the company. Could I please ask you to give everybody just a quick Don readout on First Mining Gold? Thank you.
So it's a long-term optionality play. And so permitting is due in 2023. And so hopefully that's next year. Hopefully it doesn't slip to 2024. So once they get their permitting, I think this thing's going to really fly. He called it a 15-cent stock, but it's actually $126 million market cap. So it's not, super, 126 million, but it prints as a 15 bagger. I have it as a 15 bagger, as a 350,000 ounce producer. So it's got a ton of upside. But the key here is going to be their permits. It could be a long term. So we're not looking. You're not going to get that type of a return anytime soon. But it could easily double, triple once they get their permits. So I mean, this thing could really jump. You get 100%, 200% return, but you're not going to get your 5 to 10 bagger until they actually get close to production. So I think it's a pretty good optionality play as a risk reward. The key is going to be the permitting. The risk is the permitting. There's always that possibility it gets delayed. We're expecting permitting in 2023. Who knows? I mean, it could get delayed 2024, 2025. They have a pretty good balance sheet, so it doesn't look like they're going to have to dilute that much, which is going to hurt them. I have them here with no debt and 22 million in cash. And I don't think they're going to waste a lot of that money. They do have a really high capex, which could be an issue. I don't like the capex that big for your first mine, but I'm just hoping that Neumeyer with his connections will be able to get them a loan. But it is a really, really high capex. I have the capex at $720 million. That's a lot of money. That's not going to be easy. It's going to be a lot of dilution. They're going to do a reverse split. I mean, it's 15 cents. They're going to do a 10-to-1 reverse splitter, I think, pretty soon. They have 838 million fully diluted shares. I think it's a pretty good optionality play. But the risk level, it's not a slam dunk because of the two red flags, of course, is the high capex, number one. And the second one is going to be the permitting. Can they get the permitting, next year? We're going to find out. And worst case, I hope they permitting in 2024. So there's your answer on First Mining. I do own it. I do like. I don't mind taking risks for big return companies like this. The one thing I like about it is this is not going to be their last mine. This is kind of a growth story. If they get Springpole built, they got a couple more mines to build after. This could be a really big company over the next, I don't know, 5-8 years.
And it's gold, folks. It's not a silver mine. This is the gold we're talking about. Thank you, Don, for your opinions. Thank you.
Sure.
Right, and First Majestic stands to gain from that directly as well. Now, let's see. By the way, if anyone else wants to come up and has a question for Don, feel free to go ahead. Nostra, you've been up for a minute. Did you have anything, buddy?
Oh yeah. Hey guys. Don, my question is, what is your exit strategy? Are you going to wait for most of these junior miners to become big producers to be bought out, or is there a certain point where you're just going to sell and rotate into the senior producers?
Yeah, I talk about my exit strategy quite a bit. So I'll go ahead and do it again. It's in my book, and I actually I tweet it from time to time. My exit strategy is to sell to the top. So I believe that this is a once in a generation bull market. And so I didn't think that 2011 was the bull market, because my belief is that when this bull market hits, we're going to get an all-time high, and then it's going to keep going. So basically, you're going to get, at least after it hits the all-time high, it's going to go run for another 2 years. So we're going to have like 2 years to get out, if you will. So so for instance, let's say that we get to $50 silver next year. I think we got 2 more years, basically upside. So I think this next bull run that we have is going to last basically 2 to 3 years. So during that 2 to 3 year period, I plan to sell to the top. So what is the top? My top is, I mentioned it earlier, my targets is $3,000 gold, and then a 30 to 1 GSR, which takes silver to 100. So those are my 2 tops. So what I'm going to do is I'm going to sell to those tops. So I'll be at least 80% out of my miners at those tops. And then I'll have I think I'll have about 20% of my miners left. And then the final 20%, I'll let those stop out on their own. So what I mean by stop out on their own is that I'll put a trailing stop on. So let's say that I sell a stock at $100. I'm going to use round numbers. So at $100 silver, so I sell 80% of it, and then I keep 20% or 25%. I'm going to put probably a 20% trailing stop. So basically $80. It goes down like $80 silver. Let's say the stock is trading at $100. Let's do that instead of $100 silver. Let's just use that $100. I could sell it any time all the way up. I'm going to take off about 20%, maybe 25%, depending on the quality of the company, and that's going to be my stop. And then if the share price goes up, it'll be a trailing stop, right? So if I'm at $80 and it goes to 110, it goes up 10%. My trailing stop is going to be $88, and I'll just trail it up. And so in theory, some of these stocks could sell at a lot higher than my original sell price, right? Depending on how they go. So I'm going to try to let the quality stocks, bunch of them, basically stop out on their own. And that's my plan. I plan to basically, once we get to 3,000 gold. So when am I going to sell, right? So once we get to $50 silver, that'll be my first sell. I don't think we're going to I won't sell before $2,500 gold. When we get to $50 silver, I don't think we'll be at $2,500 gold. So I might not have my first gold sell in yet, because I think silver will outperform gold. So at $50 silver, I'm probably going to sell. The first one I'm going to sell is Silver Corp. The reason why is because of Taiwan. So once we get to $50 silver, I'll probably sell Silver Corp, and I might sell, another silver miner that's doing really good. Maybe First Majestic, because I'm really a lot of profit in First Majestic. So I might sell some First Majestic at $50 silver too. And then every time silver goes up $10, 60, 70, 80, 90, every time it goes up $10, I'm going to look for the good performers, and I'm going to sell probably 80% and then put in my trailing stop. And I'm going to do the same thing with gold at $2,500. From $2,500 to $3,000 gold, I'll be basically slowly getting out.
Hey, Don, your price targets for gold and silver tend to be very conservative. And
Yes.
Just out of curiosity, why are you so conservative for gold and silver when you're so liberal for Bitcoin?
Yeah, good question. The reason why I'm conservative for silver is because I think that silver is going to be considered, the governments are going to go after silver because as it's a strategic metal. So I think we're going to have shortages in silver between, I write about this in my book, right between $30 and $50 silver. I think we're going to have shortages. I think that there's a low inventory of 1,000 ounce bars today, and that's the reason why your refiners can't keep up because they can't get their hands on 1,000 ounce bars. If they could, I don't think the refiners are running at 100%. I think they're running at 80%. I think they'd run 24/7 if they could get their hands on the silver. It's not that difficult to convert a 1,000 ounce bar into 100 ounce bars and 10 ounce bars, right? Really simple. It's a really simple deal. I don't think they can get their hands on it. So my belief is that you're going to get shortages. So once you get shortages, silver's going to jump fast. Silver's going to go from $35 to $75 really, really fast if we get shortages. And I do expect shortages. So if we get shortages, the manufacturers are going to start screaming to the government, we need silver. If you shut down like iPhones, you shut down General Motors cars because they can't get silver. Think every car company needs silver. You can't build a car without silver. You can't build a phone without silver. You can't build an appliance without silver. So, these corporations, if they shut down their lines because they can't find silver, they're going to start screaming. And that's the reason why I agree with you. I am conservative on silver. I think silver is going to go to 150, $200, but I'm out at 80% at 100 because I think the governments are basically going to say, wait a minute here. I think what they're going to do is they're going to do something to get the silver. I think the first thing they're going to do is make ETFs illegal. They're going to make the ETFs empty out the vaults and basically say, you have to sell all this at spot. And the silver is basically going to get sold to all the manufacturers. And that's going to basically make silver just drop. But it's not, but once that silver inventory is gone, then the silver prices are going to start going back up again. But initially, you're going to take a big hit. So that's the reason I'm conservative on silver. Now, on gold, I just think that, once you get to $3,000 gold, I don't know how much farther it's going to go. Is it going to go? I'm going to hold 20% and do stop outs. So maybe it goes to 3,500, maybe it goes to 4,000, maybe it goes to 5,000. I got a bunch of stocks that are still riding. So even though I'm conservative, I'm going to have a bunch of stocks that are still riding that potential wave to the very top. So there you go.
Very good. We'll get to Jim next, and then Austin, and then myself. Jim, go ahead.
Folks, I'd like you to understand what Don just said. Don just outlined his plan. And nowhere in his plan did he say, I've got 35 or 40,000 ounces of silver that I'm never, ever, ever going to sell. My kids and my grandkids are going to hold it forever and ever and ever. All right. You read about things, people like that on Twitter once in a while. And I think that if you've got a little bit, if I can label Don's plan a little bit of a trader mentality, a professional trader mentality, or a man with a plan, I think that what you've just listened to is somebody outline that it's okay to take a profit. Please do not get into a trap. It's okay we're 1,000 or 2,000 or 3,000 ounces of silver, but please do not have 30 or 40 or 50,000 ounces of silver, have it go to $200 and then have it go to 60, like some people did with Bitcoin, and not take a profit. Please take a profit. Thank you.
Yes, especially, yeah. So I haven't talked about physical though. I've been talking about miners, right? My exit strategy is that exit strategy is strictly for miners. For my physical silver, I don't have a plan. I really don't. I don't know when I'm going to sell my physical silver, but I doubt that I'll sell it before 100. I really do. I don't anticipate selling physical silver before $100, before 100. But once it gets to, 135, 150, 175, somewhere in there, I'm going to be very tempted to to sell some physical silver. I don't know. Like I said, I don't really have a plan. My plan is for my miners, because I think, the miners, your physical, I think in the long term, I think physical silver is going a lot higher. If we talk 2030, 2035, I think it's going a lot higher than 100, 150. So I don't really have a plan for physical. And I don't have a problem with you holding your physical and giving it to your kids, because I think that, like I said, even if ETFs empty out all their silver, even if the government kind of makes it illegal for retail companies to sell bars, let's say they make it where the only thing you can do is sell rounds and coins, no more bar sales, right? Something like that to limit, the retail demand, supply demand kind of situation. Even if they do something like that, I think eventually silver is going to go a lot higher. So, if somebody says, I'm not selling gold, I'm not selling my gold and silver, I don't have a problem with that per se. And again, I really don't have a plan for my physical silver at this time.
All right, very good. Austin, what's up, man?
I'm kind of going off topic, miner specific. So Liberty, you said you had something. If you want to roll with that first, I'll wait.
Yeah, mine's a bit off too. You're welcome to go for it. It's kind of a subject change.
Gotcha. So one of the things I've been looking at is kind of the refining situation. So 12 to 16 biggest gold and silver refiners in the world are in Europe. Many of them in Germany and Switzerland. Jurisdictions that very well could have energy shortages, if not this winter, likely next winter. It's very plausible that those are going to be the first things to either have their energy allotment restricted, or if not, just flat out shut off, right? Because what are you going to do? Are you going to shut off the energy to a grocery store, a home, or a silver refinery? Pick two. So what I've had a view in this, and it kind of seems like the sure bet in this is connections to Penoles in Mexico, who is the biggest refiner of silver in the world. So that I was part of that question. One is, are you factoring that into how you're like allocating to miners right now, like where they have refining contracts with? And two, do you have a view on this Penoles as a business, and by extension Fresnillo, who they own?
Well, I'll tell you what. I'm going to start with the end. Fresnillo and Penoles are a mystery to me. I mean, I've analyzed both companies. I don't know, probably 5+ times each, and they are so hard to understand. When you look at the interconnections with both companies, I honestly can't figure it out. And I don't own Penoles for that reason. I mean, they're a mystery to me. I own Fresnillo, and I think Fresnillo is going to do really well. I think it's a very cheap stock, but Penoles I just don't understand it. I don't understand the interconnection because they own a big chunk of Fresnillo, and they actually on their books, they almost say that the cash flow of Fresnillo is our cash flow, which is impossible. So the whole intertwine of those two companies is a mystery to me. Now, let's talk about energy issues. I think that there's a possibility that Switzerland their refineries could run into issues, because I think those refineries like to run like 24/7, and they have like 5 really big ones. So, I mean, there could be some issues there, but I don't know how it would impact the gold price. They do silver as well. I don't know. The other big question, which you didn't bring up, is diesel. The problems with not having enough diesel for mines to stay open. I think that could be pretty nasty. Where I'm hoping it happens is on copper mines. So if you have a copper mine that shuts down, that's going to shut down your silver production. I don't really want to see it happen for silver miners, especially silver miners I own. But some of these big copper miners, that could really impact the production of silver. Oh, by the way, do you know anything about Penoles and Fresnillo, how those two companies are connected?
I will say that I'm still in the learning process of that one as well. It is reading through their annual report and like 10K. It's something, right? I have a small
it's
position.
a mystery.
I have a small position for that reason. I'm still researching it myself, but hey, they're the biggest refiner of silver in the world. If that scenario plays out where all these refineries in Germany and Switzerland goes out, or just go offline for what you would think that they would be able to say renegotiate some of those contracts, which I believe are typically 1 year in nature, to maybe give themselves a little bit better of a margin. I would say if we're going into a world where energy shortages are going to be a problem in Europe for a few years, silver refining is a pretty good business. But I'm with you; it's confusing. The only thing I've been just like hassling the IR departments for my silver miners on where they refine. I can confirm that First Majestic uses Penoles, so they're going to be good no matter what happens.
Cool, cool.
Oh, here, 888. What's up, buddy? You got something?
Hey, what's going on, guys? I like this discussion, man. We need more of these. I just want to forewarn all of you guys in this space right now. I'm 2 drinks, 2 Woodford Manhattans in. So, and the reason I wanted to chime in is because Don said something interesting. I wanted to pick his brain a little bit. You said that you, how did you say this? My wife just left, so I'm here just drinking and celebrating the action that we saw in the silver and gold miners yesterday. So I think we can all applaud ourselves. Let's hope it carries on into the end of the year. You said something, Donna, that piqued my interest, and that was you want to hold on to silver physical, but you would be willing to sell your miners. Now, it's always been my first, I mean, I run a strategy with a partner, small mid cap value, kind of a special opportunities strategy. And we have a pretty significant weighting in it in silver and gold miners right now. We have for quite a while. And our belief is that if you're going to invest in silver and gold, the best way to do it, is to own good, solid companies that have proven reserves in the ground in safe jurisdictions. So I'm not talking about Nicaraguan or Niger, Congo, or I'm talking about like the U.S., mainland, Alaska, Canada, maybe some in Mexico. Why wouldn't you just stick with some good silver and gold mining stocks for the long run? And I know you guys were talking about like 2 and 3 and 5 baggers, but I have a feeling, my personal belief is that, and we've done a lot of work in this space, going back to, by the way, in 2016, we were the number one. I don't want to toot my own horn. I'm a little drunk here, but 2016, as you guys remember, was a fantastic year for a lot of miners. And our strategy was number one in the world, literally, for it on the back of our positions in gold and silver miners, a lot of them juniors. And, it's always been my thought that, if I'm going to be in this space, I mean, holding the commodity itself is fine. I'm not saying you shouldn't, but I'm saying if you want to get those multiples, if you want to get those 2, 3, 10, 20, 50 baggers, you got to be in the mining companies themselves. Companies that are producing, companies that have proven reserves, companies that are in safe jurisdictions that can operate, and so Don, that was my question, was like, why would you want to hold the physical as opposed to holding good quality silver gold mining stocks that have the potential to if in fact what you say is true, and I believe it, I think that gold, silver are going to move. They're going to move like crazy. I think we have a lot of leverage in the system globally. I think we're going to have a coming to Jesus here, at any time. You've never been in any of my spaces, but I've been saying for quite a long time that I think one day I'm going to wake up on a Sunday morning. I'm going to go make my espresso in my kitchen. I'm going to get my Barron's. I'm going to get my Wall Street Journal. I'm going to get my Financial Times. I'm going to sit here. I'm going to open it up and I'm going to see gold. I'm going to turn on my computer. I'm going to see gold up $300, $400, $500 an ounce like that in a click. And that's when the run's going to begin. I firmly believe that will happen at some point. And if that happens, when that happens, I want to own those companies that have that ore, that have that mineral in the ground. What say you?
Well, I have the same strategies. So my focus is to identify 5+ baggers. So all my stocks are, when I pick them, not all of them, but the vast majority have big upside potential at the prices that I'm looking at. So I have 90% of my allocation cost basis is gold and silver miners. And then I have 8% in physical silver. So like 82%, actually, like 82% in the miners, gold and silver miners, and 8% in physical silver. So the physical silver is basically for diversification. But, you know, and I'm 90% in gold and silver miners, and I have basically 150 plus stocks.
Yeah.
I'm looking for big returns.
So let me ask you, Don,
I mean,
on that note,
sure.
the 150 stocks, let me ask you this. I mean,
Yeah.
this is actually, this is a great segue here into like portfolio management. And again, forgive me guys, I am a couple of drinks in. I haven't had lunch yet. My wife went and picked up my son. We're gonna have some dinner, so I'm gonna sober up here in a little bit. But my mind's going 100 different ways. But you have 150 different stocks. Let me ask you, why even bother having those stocks? Why don't you just buy the GDX, GDXJ? I mean, can you narrow that down to say 20 to 30 names, maybe 20 names? Why hold such a vast, I mean, if one of your stocks gets taken out, if another goes up 20x, I mean,
Right.
it's going to be a round.
Yeah, let me answer. So I don't want to have a big position in an ETF. So I have positions. I own GDXJ, I own SIL, I own, I think, like 3 ETFs, and I have big positions in those ETFs. And I do that mainly for diversification. I have 3 mutual funds. But what I don't want to have, you know, just this massive position in GDXJ. I don't trust it that much. It can blow up. I want to make sure, that when, gold goes to $3,000, that I get the return that I'm expecting. So right. I do own the ETFs, and I have big.
And by the way, I'm not. If you go to my Twitter handle, like I have a pinned tweet. I despise ETFs. I think they're just nonsense. But so I like owning individual stocks. I like owning the underlying commodity itself. You know, whether it's silver bars, coins, whatever. But I don't own GDX or GDXJ. But my question is, why would you own 150 different stocks? I think out of the stocks that you own, there's probably 20, 30 that are the ones you want to own for a long, long time. Why not stick with those?
Right. Because I'd have to have too much allocation in them. I don't want to have, say, more than 3% in a single stock, and I don't want to have most stocks. I don't like to have 2%, and the reason why is because I can sleep at night. I don't really care if I own. So when I go in and I buy a stock, I usually buy less than 0.5%, and I'll buy 0.5% if it's a quality company, and then I'll buy 1% every once in a while if it's a really good mid-cap producer that I really like.
Right.
But most of my stocks are right about 0.5% of my allocation, and the reason why is like, okay, this has 5+ bag potential, and I don't want to worry about it. So what if it goes, if it doesn't do well? But I don't know who the winners are going to be. So for instance, in the silver mining space, I don't know who the 10 baggers are going to be. Right. So I own about 45 of the silver miners. I basically own the entire sector. So I don't have to worry about picking the winners in the silver miners because I got them all. Some of them are going to be 10 baggers, and I'm going to own them. And if I own 150, plus miners, I'm going to own a bunch of 10 baggers. Like I said, I'll give you an example. So I bought Crocodile Gold way back when, doing my, my 0.5%, kind of deal, right? And Crocodile Gold got taken out. This is to give you an example of how you can't pick winners, and this happens. So Crocodile Gold got taken out by Newmarket, and then Newmarket got taken out by Kirkland Lake. And then Kirkland Lake drilled Newmarket's Fosterville mine and just exploded in value. Right. So that mine basically just totally exploded. So that small position now is a huge position for me. Yeah. And my cost basis is going to go negative because of the dividends. But I can just sit on it because I don't look at risk from my cost basis. I mean, I look at risk from my cost basis, not from the current valuation. So I'm sitting on, it's basically my Cooking Lake is over 6 figures now, but I paid like $10,000 for it. But I don't think of it in terms of 6 figures. I think of it in terms of $10,000 because that's what I paid for.
Your initial capital, yeah.
And so I don't worry about it going down because I paid 10,000. That's how my strategy. My strategy is to take the emotion out of it, take a low investment, let it ride, have all these positions, and then just basically make a bunch of 10 baggers.
Right. And again, I'm not criticizing the way you're. I think anybody that's in this space is smart to be in it. I think there's the way you're doing it is, in my mind, is absolutely fine as long as you understand. And it sounds like you have a specific way that you're handling it. I think that makes sense. And I guess it depends on if you're running your own money or if you're running money in a strategy or you know what I mean? So there's different ways to do it, but that was a good explanation. I do like that. And I know that that happens a lot actually in this space, what you just described. And so by having a wide swath, you're going to pick up those opportunities and, as opposed to kind of missing out on those, so I do agree. I think that makes a lot of sense.
Let me give you another example. So back in 2009, coming out of basically, that's when this miners crashed, right, in 2008. So in January 2009, I bought 10,000 shares of First Majestic at $1.15. So 10,000 shares, and I only paid $10,000, right? Small allocation. 1% allocation. So then it's going to probably go to $50. So 10,000 shares at $50 is $500,000. So you're basically turning 10 grand into 500,000. I mean, you can't beat that with a stick. It's like it's somewhat low risk, but I didn't know back then when I'm buying, those shares that First Majestic is going to turn into a monster stock. So you don't know which company is going to turn into monster stocks. I bought, another example is Fortuna. I bought Fortuna about $1 a share back in 2009. I'm just going to let these ride until we get to the very top. So I'm thinking, First Majestic is probably going to get to at least $50. So a lot of these, so that's my strategy. Get a bunch of positions, and then watch and wait and see who the winners are.
Right. No,
I'm trying to pick winners. If you have 30 stocks in your portfolio, I guarantee you don't know who's going to be the winners. You're guessing.
Well, in our portfolio, we have a wide diversification. So the miners represent about 23% of the overall strategy, and out of those, we have 4 mining stocks. So you have 150, I have 4. But the thing that we do is we do a lot of we do a lot of fundamental work. So we know the management teams. A lot of times we've actually gone out to the sites. And like for instance, I'm in San Francisco. We've gone out to Nevada, some of the production facilities out there. So, and look, there's you could do it any. I'm not saying your way is the best way or the worst way, or my way is better or worse.
Yeah,
so,
I know.
As long as you're in the sector, I think it makes sense.
Right. So I've been doing this junior since for 18 years. And you can't pick winners. It's impossible. I've found that out.
Hard. So the way we do it, I know it's hard. It's extremely difficult. So what we do is we start with, there is a way you can kind of get an idea. We look at for instance, some of the names that we own, the way we kind of landed on them, and we've owned them for a long time. The way we, proven reserves are number one. Right? What do they have in the ground? We're not looking for exploration companies looking to find silver and gold. We're looking for guys that are producing, that have proven reserves in the ground.
All you're doing is increasing your odds.
What's that?
Yeah, we all do it. We all look at all of the factors, right? We can list 10 different factors we look at. That's how we all analyze these miners. But all we're doing is increasing our odds. That's all we're doing.
That's exactly right.
And you could. I can give you my 5 favorite stocks right now, right? I can tell you these 5 companies right now look the best when you look at all the factors. These guys look the best. But then I give you, and then you look at those 5, and then I'll give you 25 other stocks over here on the right that are they're close to those 5.
Yeah.
And of those on the right, they're probably going to a big chunk of those stocks are going to outperform those 5 that you thought were the best.
Yeah. So the ones we own, just for disclosure, I mean, we own Newmont Mining. I mean, that's the best. That's the bellwether, right? Newmont Mining. We've owned it for a long, long time, and we have bought more as opportunities come up. But we own. You guys brought up Pan American Silver. We've owned that company a long time. We actually bought a bunch more Friday on the drop on the announcement. We like that company. It's a great operator. We own Hecla Mining. We own Core. Core and Hecla are fantastic silver producers. So, I mean, you know, you're going to have operational issues with all these companies. You're going to have cost issues with all these companies. I mean, somebody brought up diesel. You know, I mean, that's obviously an issue. Labor costs have gone up.
So let's just look at those 4 stocks, right? So I own Pan American and Hecla and Core, and I think that those 3 stocks are all must-own stocks.
Yes,
absolutely, they are. But until Hecla acquired Alexco, they were not a strong company. Alexco improved them dramatically. So until that point happened, Hecla almost went bankrupt. They traded at like $1 not that long ago. They almost went bankrupt. Core has had a terrible record. Their management team has just been, one mistake after another. So there's 2 companies that you have a big projection, but you're lucky now they're turning a corner, right? So now it's not a bad time. I call them must-owns. They perform well during bull markets, but they perform terribly during bear markets. Pan American right now is actually having some trouble, but now this deal that they're trying to acquire some properties from Yamana, that could be a game changer for them. They have 2 massive silver projects that they're trying to restart. If they restart either one, it's going to help them, but Pan American's a must-own. Newmont, I'm sorry. I mean, it's a 3-bagger. Why do I want to own a 3-bagger? I can own, Silver Wheaton's going to do better than Newmont. What's the point of owning Newmont? I mean, yeah, you're going to get a good dividend, but you can just check Newmont and Barrick off the board. You don't need to own them because they're not going to outperform, so many other companies.
I think the reason, you bring up a good point, and I agree with you on that. I think the reason we own Newmont is the same reason you own 150 stocks. You understand what I'm saying?
Yeah.
Same reason I own Newmont in the strategy is the same reason you own 150 stocks. I can't own 150 stocks. Our mandate is to own 20 to 30 stocks and represent as many S&P sectors as we can, right? So
well, you should own Agnico. If you're going to do that, you should own the best.
We've looked at it.
You should own Agnico and not Newmont.
Yeah, no, we've looked at it. There's some reasons why we don't own that, but again, the reason we own Newmont is like that bellwether. That's the benchmark stock in the sector. Right. And so the reason you own 150 names is the reason we own Newmont. That's, what I mean?
Yeah. See, so you said you own 4 miners. I mean, you can easily find 20 quality names.
Of course.
So you can basically break those 4 into 20 and have a better portfolio.
But the names we own are like 5% of the portfolio. We have pretty significant weightings in these names. I remember in 2015, you could have picked up all these names for I mean, it was 2015 going into 2016. It was unbelievable the kind of stuff that was going on in the space. It was just unbelievable. The same kind of shit's happening right now,
Right.
I agree with you guys. I think gold and silver, it's just they're primed to move. I mean, and comparing today with like even 7 years ago or 12 years ago during the GFC, not even comparable. I mean, I was just looking at as you guys were talking and discussing. I was just looking at the Fed's balance sheet reduction, and it's like 200 billion on a close to $9 trillion balance sheet. It's nothing. It's a rounding error.
Right.
So
I
agree. I think gold and silver. We need more of these rooms, guys. I think we need.
Yeah, good conversation. I'll give you one more comment, and then we'll move on and give somebody else in.
Yeah. Absolutely.
So you mentioned 25 and 50 baggers, right? So I think, one of the reasons why I own 150 stocks is because I actually think that when silver goes to 100, which I think it will, I think a lot of these small silver plays are going to be 20, 30, 50 baggers. I don't know which ones. So I want to own a bunch of them.
100%, yes.
Okay, so let's go ahead and move on. But thanks for your questions.
Really quick, I kind of got to jump in. O'Hare, we love you. So thank you so much for joining in. And we do these weekly. So if you're interested in being a guest, we'd love to have you on. So Liberty can shoot you out an email, and we also post these on YouTube. So and as there's more people kind of getting in the room, the etiquette is if you want to jump in, go ahead and raise your hand if you have a question about a specific stock. So I know, Hutch, your shoulder's getting sore from holding your hand up. So if you want to jump in.
I just got to give you guys some props. I think we need more of these types of rooms. And I think it's a critical thing to educate people on this particular space. And we just don't have enough of them. I still see a lot of Bitcoin and crypto and NFT rooms and all this other nonsense. We need more of these types of rooms. So.
Well, we do them every Saturday night at 7:00 Central Time. So you're welcome to join us. We took the last week off, but we typically do it every single Saturday. So
well,
you're
I will
welcome
be
to join
here
us.
when I see you guys. I will be here with a drink in hand for sure.
All right, buddy. Look good forward to it. Hutch, what you got, buddy?
Yeah, it kind of ties into piggybacks off the last question. So, Don, I posted at the top your September 17th announcement of silver stocks, and I remember when they were coming out fast and furious. I had heard you speak on here, but I was wondering how. I know it's a lot of work, so I'm not saying like, hey, when's the next one? But I'm just wondering how often do you kind of update them, and then also, it's a pretty big daunting list. To O'Hare's point. So if you wanted to have a little bit more concentration, when I'm looking down at the list, like I have pinned up top, is it weighted or is it structured in that you like the top one the best, bottom one not so much? If you could just share a little bit about your methodology, but these are great lists, and I had saved them to my bookmarks. And if you could let us know if there's a newer version and that this is old news that I've posted.
Which list is it again?
On September 17th, it said, let's try again. Silver stock rankings, September 22nd. Who is missing or ranked incorrectly? Starts with Aya, then Silvercrest, then Go Gold Resources. It's a tweet you put out. I bookmarked it. And you put out a bunch of these, like some for silver, some for gold. And I remember at the time. Yeah, go ahead.
Yeah, that sounds like my new Substack. So I created a free Substack. It's Substack, Don Durrett. You guys can find it. So I have a whole bunch of lists that I put on Substack to help people to find stocks. So they're basically grouped. They're basically that the one you just mentioned was just the silver miners. So I've ranked them. I ranked them on winners and could be winners, should be winners, and then long shots. That way people can see the risk level of their if they own one of these, what the risk level is. And the winners, they're basically, okay, let's go do some due diligence. Don thinks this is a good stock. So I'm trying to share my knowledge with people so that they can go and do their own due diligence.
Yeah, it's great. No, and I appreciate the context. So I was right that the closer it is to the top, the more you like it for whatever reason.
Yeah.
Okay.
The Substack ones are all ranked. Yeah, absolutely.
And then the Substack, do you mean like on your profile, dondurrett.com, my links? Is that what you mean? It's there in a Substack somewhere?
Wow. I haven't put it. I forgot to update to my links. I'll do that after today. It's not in my links. I'm gonna have to add it. No, just go to Substack and search for Don Durrett.
Okay. Yeah, it's a great resource. I just wanted to pin it up top. I mean, it's awesome to hear you speak live, but I remember when you were posting these out in September, and they were coming out fast and furious, and you were kind of changing them, or oh wait, I forgot some, and so I bookmarked them all. But it's cool to hear some context behind it. So yeah, for anybody who's listening, there's one up top. I think that's the most recent one, correct? September.
Yeah. I'm not sure. September and October is kind of when I did those Substacks. Okay. And there's a bunch of lists. There's silver, there's explorers, there's producers, development, lots of lists. Hey, one thing I wanted to mention for people that are listening tonight, anybody that wants a free trial on my website, Goldstock Data, send me a DM, and I'll set you up with a free trial.
Very good. Well, Don, we're going a little over 2 hours here. I'd like to ask you at least one political question. I always do.
Right.
A little light politics, no big deal. We got the elections coming up, obviously, and it looks like Republicans are on the slate to win substantial seats, potentially. Let's say that happens. How do you see the impact on fiscal and monetary policy, if at all, And how do you think that this will have an impact on the gold and silver space? Are the elections something you're monitoring in terms of these investments at all?
Yes, I think that the political situation over the last 2 years has actually created some stability, if you will, in things because the Democrats have controlled everything. So they've been able, it's like a relief valve. They've been able to pass stuff that they had to pass. If they, stuff that they wanted to pass, they couldn't get through, but if they had to pass it, they could. So they had a bit of a relief valve. And I think that's coming to an end here. I think the Republicans are going to win the House, possibly the Senate, but it looks like the odds are pretty darn good they're going to win the House. So if they win the House, that basically creates a big, now you have the Democrats controlling the executive branch with Biden, and then you have the Republicans controlling the House. So nothing can get through now. Now it's basically a logjam. So the relief valve goes away. So I think politically, it actually creates a more difficult period economically for the U.S. I actually think 2023 is going to be much, much worse economically than the last 3 years since COVID hit. I think 2023 is going to be worse than 2008. Beginning of a deep recession. I think it's all going to hit the fan here in November after the election. Everybody starts to realize that exactly what I'm talking about, how this relief valve is gone, and now we just have total dissension. Basically, Biden can't get anything passed, right? He's a total lame duck. He can get nothing passed because the Republicans control the House. And there's not going to be 60 votes in the Senate, so they can't overturn any vetoes. So you're stymied. Nothing's going through. Plus, I think the Republicans are going to be a wee bit prickly after the turn to the left that the Democrats did under Biden. And I don't think anybody can disagree with that the country has moved left over the last 2 years, especially with the COVID restrictions. The government has basically kind of expanded its reach and basically puffed up its chest and said, we will tell you how to do things, right? America's kind of made this turn left, which is really kind of interesting. And so the Republicans are, they want to kind of their pound of flesh here. They want to kind of turn the country back in another direction, but they can't because they don't control the executive branch. So you have this basically, this political Cold War, which I wrote a book on it, America's Political Cold War. Last year I wrote it to explain exactly kind of what's happening politically in the country. And I don't think that the political chasm will be closed. I think 2023 is going to be a kind of a window into we're in trouble kind of thing, where we're not going to be able to fix this. And if we can't fix this, then what? So the next 3 years are going to be really interesting as America basically is struggling with trying to decide or trying to figure out what direction we're going to go in, or what direction, inevitably we're going to be forced into. It's going to be very nasty, and it's going to impact economics. I think economics are going to be at the forefront, and I think November. But I think by the time we get to end of November, everybody's going to be in shock what's happening economically and politically in the country.
Well said. You mentioned this political Cold War. It is interesting. Biden is on record fully endorsing everything that the Fed is doing. And we understand the inevitable outcomes of the path that we're on, as you've laid out the case over the course of this interview since we started and many times before. It is interesting now that as we continue down this path, you're starting to see a dynamic shift here, especially with the media. CNN had an article recently essentially fact-checking Biden. This is something you've never seen from the left. I mean, they called him out on Social Security, on corporate taxes, the debts, the deficit, unemployment rate, student debt policy, gas prices. They called him out on his comments about the Trump tax cuts and who it impacted and who didn't. You know those memes where you have the two headlines next to each other where the media contradicts itself. You could do this. You could do this with the fact checking that CNN did versus what they had said when Trump was in office when this stuff got passed. They're turning on the man. You almost have to wonder if he's the ultimate fall guy for everything that's coming. If he's fully endorsing everything the Fed's doing, and whatever damage may come will be at the behest of Biden, who gave it the go-ahead the whole time. Curious. Do you have any comments on that, or you want to skip it?
I'll go ahead and open my big mouth. So my book, America's Political Cold War, the subtitle is that neither side can win. I'm kind of agnostic on American politics because my political affiliation doesn't fit. I don't fit Republicans and I don't fit Democrats. I don't fit anywhere. I'm a utopian libertarian. Most libertarians are conservative. I'm a libertarian utopian. I'm a unicorn. I'm the only one that I know of. I don't exist. So I'm somewhat so I'm somewhat agnostic on politics. I almost feel like I'm an outsider looking in, trying to analyze the situation. So from that viewpoint, the leftists, starting in 2016 with Bernie Sanders, he really flipped the switch on the Democratic Party. He basically opened the window to the idea that leftist collectivist ideology can work. And a leftist collectivist ideology is something that we need to go towards, which is counter to what the American values that we've lived by since the founding fathers. I mean, they're literally want to burn the Constitution and rewrite it, but they won't come out and say it. They won't verbalize that, because if they do, they won't get any votes. So they're doing it in a very subtle way. That's why they're saying democracy is on the ballot, which is totally ridiculous, right? I mean, Republicans, they just want, a fair shake. They don't want to, create this totalitarian system. As a matter of fact, since the leftist collectivists, what they want to do is so counter to the United States, the only thing that they can really do is try to control the narrative in a very narrow framework that they basically control. And they don't want to have a debate over it. So they basically need the mainstream media to kind of control the debate on what they want to achieve. And anybody that's not in that narrow narrative gets attacked, like Musk. Musk buys Twitter, and they basically put him and, in the MAGA crowd. And clearly, Musk isn't in the MAGA crowd. He's just someone with somewhat of an open mind, right? He says whatever's on his mind. Who knows what politics Musk has? But he's definitely not in the MAGA crowd, right? But they want to put him in it because he's basically opening up the possibility of debate about what I'm talking about. So America is totally screwed because the left is not going away. So that,
Don, I think Elon is much like you. I think Elon is much like you, and I'm in the same camp.
Yeah.
I'm in the same camp.
Okay.
I'm in the middle. I think this country is bifurcated over the last 7 years. It's ridiculous. So yeah. I think Elon's much like you. I think I don't think he's quite in the middle.
Yeah, quite possibly, absolutely. And so, so we have the left with their ideology. They want to basically form a new union, basically a new way of life in America. They want to change it all. It's a very radical, revolutionary approach. And the thing that's bizarre about it is that the mainstream media is not really coming clean with the fact that this ideology exists. They're acting like this is just democratic politics, right? It's unbelievable. And so there was a poll this week by Gallup, and only 11% of Americans thought that the media was basically doing a good job. 11%. And the reason why is because they're not coming clean here. And then the conservatives on the other side, they're not admitting their faults. And that's the reason why the left is so, basically is so against them, because they're not coming clean either. And that's what I exposed in my book, the conservative Republicans have to come clean with what they're trying to do as well. Neither party are coming clean with their faults. And
So
I don't think they will. I don't think
yeah,
they'll admit it. And so if they don't, we're stuck.
yeah, let me ask you, Don. This move we had the last few days in gold and silver. What are your thoughts? Sustainable? Not sustainable? Are we giving this thing back? Where you stand on this?
Oh, thanks. Let's get off the politics. It's too controversial. Yeah, it's not sustainable at all. We talked about this earlier on. It's just noise. What we have to do is we have to wait for the selling that's coming in the S&P 500. We're not just going to, gold and silver are not just going to blast off here. Maybe the best thing that they can do is kind of hold their ground, like silver, hold at 20 bucks, trade at 20, 21, hold its ground, not go back to 19 in the 19s this week. That would be great. If silver closes on Friday in the 20s, that'd be fantastic. All gold and silver can do is hold their ground at the moment. And gold, if gold can stay over 1670 this week, that would be fantastic. Maybe it could go to 1720, 1730, but that's nothing special, right? It's nothing special. It just needs to hold its ground before the selling comes, because the selling is going to come hard, fast, and furious this month in November. And when that selling comes, we'll see where gold and silver land. But right now, it's just noise.
When you say selling, you're talking about the broader equity market. You're not talking about gold and silver.
Yes.
Okay.
No. It's S&P 500.
Okay. Just a couple of questions to wrap up, if that's okay, Don.
Yeah, it's fine.
All right. So you had mentioned the Fed earlier. We were kind of on a run, and then we took some new questions and got off track. So I just want to circle back one last time on recent events with the Fed raise, what your expectations are. And something I appreciate about you, Don, is that you're dynamic. You're not stubborn. I have seen you in real time recognize new data and process it and say, hey, the situation has changed, right? You go with the flow. Adaptation is survival. In our first interview, I had asked you if you thought it was possible that perhaps the Fed is weaponizing the dollar and yada, yada. I know you remember and understand the question. Has anything you've seen since then, especially with the recent hike, changed your mind about that at all? Or do you think that they're running the narrative that they're telling us?
I think actually, I haven't really talked about the Fed. I'm glad you asked this question so I can kind of talk about it a little bit. So I've missed, since Fed started raising rates, I've basically, every number that they've done, I've predicted correctly, from the first raise all the way through. So I've kind of had a good feel for what the Fed is, doing and what they're going to do. And my feeling is that the Fed has a lot of hubris, and that the Fed thinks they have to have confidence that they can fix the problem, basically. So they have confidence that they can fix the problem, and they have confidence that they know what they're doing. And it's just hubris, and they're wrong. They were late to the show. They basically let inflation get out of hand. They've never admitted that, what Friedman said, that inflation is fundamentally a monetary phenomenon. They've never admitted that. So they won't admit that they're creating this inflation by printing, expanding the money supply by this ungodly amount since 2020, right? And exploded it by, I don't think it was like 40% in like 2 years. So they're deluding themselves by ignoring that they created the inflation. They were late to basically recognize it. They called it transitory, right? Which was a total, that just shows you how far off base they were. But they didn't really understand that inflation is a monetary event. And then they blamed it on supply chains. And we got all these we got inflation because of supply chains, right? And now they think that they can fix it by raising rates, then pausing, then lowering, and then and then injecting money again, right? But it's delusional, and so they're going to lose control here. and it's pretty obvious to me because they're in a bind here. They're in a big bind because inflation basically in the bind. They put themselves in the bind. The irony of all of this is that they basically gave Bernanke the Nobel Prize here. Bernanke was the guy that basically unleashed MMT, which is what's going to basically end the American empire. And yes, and so Yellen came in and basically extended it and basically continued MMT. And then Powell did the same thing. They basically, all of them basically said, we're going to go with MMT. And we're not going to admit that debt is dangerous, money printing is dangerous. We're not going to talk about that. Not at all. It's not even going to be part of our vocabulary. And everybody's giving them these free passes. Money printing is dangerous. When you get your debt to GDP over 100%, you are trapped. And the only way you can get out of it is basically not good. There's not a lot of good choices once that happens. And we're in that trap right now. And we're in that trap with inflation, which makes it even harder to get out of a debt trap situation. So, like I said, I think that Wall Street's going to start figuring this out in this month in November. And we're going to see a ton of selling on Wall Street. And now the Fed, I have a lot of sympathy and empathy for Powell because he is not an economist. He does not have a PhD in economist. He was trained as a lawyer, and then he worked as an investment banker on Wall Street. So, I think this is a job for a really good economist, and I don't think he is one. So I think, he's, somewhat over his head a little bit. And a lot of people that are on the board that they have on the board are bankers. They're not economists either. They're totally trapped here. So all they can do is raise rates. Now they're at 3.75 to 4 right now. And once they get above 4, I call it suicide. And we're on a suicide watch here. Now, this is metaphorically. So suicide for the economy, right? And so anything above 4, I think, is a suicide watch, and then 5% or higher is basically insanity. I don't think the Fed funds gets to 5. I think something breaks, but after the next raise, so they basically had a free pass to raise to here without anything seriously breaking. But it's going to start to break now because everybody's expecting them to raise. And they're doing quantitative tightening at the same time. It's just, they've gone too far. I'm kind of in the Hugh Henry camp that these guys need to wake up, that they've gone too far. Hugh Henry is like the banks. They need to force the banks to loan money. They need to get the money out there. They need to get the economy growing again. They need to ignore inflation and focus on the economy. I'm with Henry all the way here. They're focusing on the wrong thing. They're focusing on inflation. They should be focusing on the economy.
Don, the problem with rising rates, and lending money is that as rates go higher, it becomes exceedingly more difficult to find quality borrowers. So, you look at lending standards, and all the banks, literally, this is one of the things that we've been looking at recently over the last few months.
Oh, here we lost you. You can hear us.
I lost him.
Okay.
I'll follow up on this.
That was Jerome. Jerome wanted me to be quiet. He said don't be talking about the banks. I had a call come in.
Okay. So I wanted to follow up on this idea of loans, right? So inflation is a monetary phenomenon, right? So you have to stop printing, which is, that's bad, right? Lack of liquidity, the stock market's going to go down, but you can still you don't have to raise rates. I think the Fed funds should never have gone above 3. And your housing market just gets obliterated once you go above 3. We should have stopped at 3, and we should have slowed down the money. So inflation wouldn't die on its own. If you stop printing money, the banks are going to slow down their loans. They're not going to make a lot of loans per se. You have to force them to make their loans. That's what Henry said. You got to force them to make their loans. The money creation has to come from the banks. not from the money printing. The banks make a loan. That's where all your money printing is going to be. But you have to stop. You can't. The other thing is the government, the federal government. Federal government has to slow down their printing as well. Like their deficits, like over.
Oh, that's
you
never
know,
going
they're
to happen.
headed.
Don, come on, you know that. I mean,
Well,
that's never going to happen. The federal government's going to keep spending money. You know, as long as
well,
we,
you
the
can put
taxpayers,
pressure on.
allow it, they're going to keep
Well,
spending money.
actually, the Republicans get in control here. They can slow down the
Well,
deficit.
come on, now
They
let's be
can
fair.
slow
The
it down.
Republicans have been spending money just like the fucking Democrats. Okay, this idea that the Republicans
Well,
are
the only
more,
time, right? Well, the only time, yes, the only time they slow it down is like when they control the House and the Senate, and then the Democrats control the House. Bill Clinton, they forced Bill Clinton to slow down his printing. You're right. When the Republican president's in office, he'll print. But if it's a Democrat like Biden, the next 2 years, the Republicans can throw a halt on spending if they wanted to, and that will slow down your inflation. You got to slow down your money printing to slow down your inflation. But right now, the politicians will not admit.
Yeah, I think there's a lot of there's a lot of different areas that a lot of different ideas about how what is causing this inflation. One of the things that I don't know if you've ever been in any of our spaces, but we've talked about this ad nauseum. The problem with inflation right now is it's really primarily driven. It's not financial inflation, which is the one you're referring to. Over the long run, over many decades, yes, monetary inflation is what kills the purchasing power. The problem now, over the last couple of years, is this inflation we're dealing with is not necessarily, in my mind, financial inflation, right? Money printing. It's although that's been part of the problem. It's really been the issue. It's ESG, it's energy, it's the war in Ukraine, it's the the bottlenecks with COVID. This global pandemic that we're coming out of. I mean, there are a lot of issues. It's not just money printing. I mean, I think all these things are coalescing into one big shit storm that we're living through right now. It's literally, in my mind, a perfect storm for a perfect opportunity for gold and silver. I mean, you have you have the monetary printing of a Fed balance sheet at over near $9 trillion. You have you have 14 years of ZERP policy. You have energy crisis that we're in the midst of. That's not going to be resolved anytime soon. You have labor cost inflation, which is sticky. You have a COVID reflux that we're dealing with. I mean, all of this is just the backdrop is actually about as perfect as you can get for much higher gold and silver prices. So I'm very bullish on the price of gold and silver. I think the backdrop couldn't be better.
I agree completely. I think that the setup for gold right now is much better than it was back in 2008-9 because the Fed
100%.
had tools. They had tools back then to deal with it. Now they don't. So the systemic risk is actually higher now. I think leverage is higher now too.
Much higher.
Yeah, and like I said, the way they can control inflation, they're not going to do. So inflation is going to be very sticky. Absolutely. I think we stay over 5% next year. I don't think we go under 5% all year. It's going to be a slow slog all year. 7%, 6%, 5%. But I think 5% is going to hold all year next year.
I think we're in a situation where we have stagflation. We're going to have slower growth. I mean, you're seeing that now. And you're going to have higher, stickier inflation. So you're going to have a situation that we had in the 70s.
I agree.
Which I think is a backdrop for much higher gold and silver prices.
I agree. I think we're heading into recession, which is no growth, and then you have sticky inflation. That's stagflation. I agree completely. It's going to be nasty next year. And then the thing that's going to be really, really bad is that in tandem with that, the stock market is going to be dead as a doornail. So there's not going to be anybody making any money. And so people are going to be getting laid off left and right because if Wall Street isn't working, if the stock market isn't working, corporations are going to lay people off. So mass layoffs are going to be all in all the rage in the first quarter next year.
All right, guess. Jim, we'll take you up as last call here.
Thanks very much, Liberty. One other macro factor, folks, in the room listening. The Russians and the Chinese have been doing some backroom dealings between the two of them. And there's some feeling, I may have mentioned it before, there's some evidence out there that they're both accumulating gold, possibly to have some sort of partnership type currency. And the other macro factor is that Russia because of sanctions that the U.S. has put on them due to their aggression in the Ukraine, Russia has started accepting rubles, Russian rubles, instead of U.S. dollars for their exported energy, for their exported petroleum. And there was kind of a petrodollar agreement worldwide that petroleum was going to trade with dollars. Well, Russia's kind of broken that. It's just food for thought that if Russia and China do get together, start doing some dealings, or if it becomes true that the rumor is true, I think that adds up pressure on gold as well. The downward pressure on the dollar, upward pressure on gold.
Yeah, talking about currencies there. Russia needs a new system because they're kicked out of SWIFT. So SWIFT is your international banking system, and everybody uses SWIFT to move dollars back and forth to pay off any transactions, international trade transactions, cross-border transactions. So Russia's out of SWIFT. So they've been working on a new system all year, this whole year. They've been working on a new system to replace SWIFT. And I think that new system is going to come in tandem with a new currency. And I think it's going to get released in the first half of next year. When it does, I think that's going to be huge game changer for the dollar. That's when the dollar goes basically under 106.
Yeah,
and gold takes off.
Lou Groman wrote a piece. He thinks that Russia could simply sell oil and to any country, but settle in gold. Right, so you could buy it in pounds, but settle in gold, right? And if Russia were to do this, you could break the gold market, the paper market overnight, because you would have arbitrage by the free market immediately. So if Russia were to settle for 40 barrels of oil for the same equivalent amount of gold to Western oil, it would break the market. And
I think, so it makes much more sense if the currency that they're trading in is gold backed by 15%, somewhere in there, then Russia would be getting gold for their oil, because the currency that they're getting paid in has, let's say, 10%, 15% a gold part of it. So I think that makes much more sense than trying to get paid in gold. Countries don't want to give away their gold.
And also the logistics to transfer gold.
Yes, absolutely.
It doesn't work very well. It's too heavy.
No, it doesn't work.
You can't.
It doesn't work.
It doesn't work.
But if you're Russia, wouldn't you love to be paid
guys,
in a currency
one of the ways that it
backed
does
by
work,
gold?
Hold on, man. He's talking.
Yes, sir.
I was just saying, wouldn't Russia love to be paid in a currency that's backed by gold?
Go ahead, Skeptic. O'Hare, your name keeps changing and your icon keeps changing too. I don't know what's going on with your.
I'm in a federal protection, so I got to keep changing my my profile. Yeah, as a gold bug, dude, you gotta hide from all these shills out there, man. You got to be careful. No, I think this idea of transferring tons and tons of gold between countries is ridiculous. I mean, all you got to do is put gold on the blockchain. If you can incorporate blockchain technology with gold and silver, it's a done deal. And I think that's happening right now. So all you gotta do is just put gold on the blockchain, and then the problem is solved. Bitcoin doesn't solve anything, but gold on the blockchain solves everything. That's just my opinion.
Nice. No, but we haven't talked about blockchain. I like it. You're right, absolutely. But why not put this new BRICS plus currency on a blockchain? That makes a lot of sense, right?
Yeah, exactly. That's all you need. You just need a verifiable third party. Let's call it Switzerland, whatever. Not necessarily Switzerland, and then it just got to put it on the blockchain, and that way everybody knows it's there. And if they want to get it, if they're so inclined to take possession of it, they can, but they don't have to. So it's not like you have to move tons of gold all over the place,
Right. Yeah, that makes absolute sense. Yeah. You said Bitcoin, basically doesn't have a use as a transactional currency. And I kind of agree with that. But where Bitcoin, I think, is going to shine as basically as a base layer, like you said, we can put gold on the blockchain, but you can also include Bitcoin as kind of a base layer. So Bitcoin could actually be part of this this blockchain, maybe 5% Bitcoin, for instance. Bitcoin, I think, makes a lot of sense as a base layer, not so much as a transactional currency, but as a base layer currency.
It is interesting. You're aware Peter Schiff doesn't like Bitcoin, but he does support blockchain for a gold-backed currency. In fact, it's Kinesis. He's actually promoted Kinesis recently. What are your thoughts on that?
Yeah, I like Kinesis. I hope it works. I think there's a lot of use cases for it, and so we'll see how it goes. But I don't own any Kinesis, but I'm rooting for them. I hope they can pull it off. Using gold on the blockchain, I think it's somewhat redundant, if you will. But I think because why gold is gold, right? So why are we putting gold there? But it could work. I love all these different ways to use crypto, and that's why I say crypto is not going anywhere, because there's just too many projects out there, too much money's being invested. There's too many ways to use it. I actually think what's going to happen is we're going to have a separate monetary system that's outside of the current system that's all crypto. It literally is going to coexist with the financial system.
We're going all
kind of a
multi. It's Dogecoin or bust, dude. Elon's
I think we're going to have a multi. I think we're going to have a multipolar financial system, and crypto is going to be basically a separate system. Some people use that. Some people use this other system, and they don't need to even coexist. They can basically be separate systems. They can interconnect or whatever, but they just coexist. They're not integrated. I don't think they will be.
This is where the CBDCs come in, right? I mean, all this talk of like these central bank backed currencies that are blockchain based. I mean, it's fucking absolutely nonsense. It's completely like. I mean, why would you even want
that's
that?
the reason.
Yes, no sense.
That's the reason why the other crypto, the private crypto world will coexist, because they don't want to integrate with CBDC. They go, I don't want to touch that stuff. And so CBDC is going to try to integrate with the financial system. I think the current fiat financial system, I think, is going to have a lot of problems over the next few years, and that's going to create an opening for the crypto world to basically get its foothold in. I think what's happening in El Salvador is going to expand. I don't think they'll last. Once Bitcoin gets back to 50,000, I think you're going to see another country do the same thing.
I'll tell you what. Now, the nice thing about a gold-backed cryptocurrency is it eliminates the issue of what all these like, for instance, Bitcoin's going to have 23 million or whatever it is, 23 million Bitcoin ever mined. So once they get fully mined, that's it, right? So if there's nobody that's willing to transact in Bitcoin and spend it, because the idea is I want to hold on to it because someone else is gonna, it's gonna drive the price of Bitcoin up. Gold-backed cryptocurrency eliminates that problem, because gold can be mined, right? It's a resource that's in the ground. There's there's reserves all over the world. So, the price of gold could go to 10, 15, 20, 30, 40, $50,000 an ounce, and it could be on the blockchain, and you could still discover more gold. I mean, we have a lot of gold here. It's extremely expensive to mine. And so I think that resolves that issue of having that constrained $23 million Bitcoin. Now people say, well, there's a lot of Satoshis. It's divisible into 100 million per Bitcoin, whatever it is. But the reality is it still doesn't solve the problem of a 7 billion, 8 billion, person world population. I mean, I think the gold-backed, crypto is really the way to go.
Well, yeah, it makes a lot of sense, because what it's doing is it's making gold liquid. And that's gold's weakness, right? Not being liquid.
That's
if
right.
If I have gold, if I have a gold coin here and I want to buy pizza, I can't do it. So
there's already two gold blockchain solutions.
You used to be able to do it when the dollar was backed by gold, but then they get, what I mean? So that it has worked in the past. The problem is we need to go back to that.
It already exists. There's a token called PAXG, PAXG, which allegedly, if you read the white paper, is backed by audited gold. But it goes back to something that Don said. People that are into crypto prefer the decentralization of Bitcoin, and for anybody to come out with a cryptocurrency backed by gold, it entails a certain amount of centralization. You have to have enough centralization to store the gold.
In the World Series, looks like they're going to win it tonight.
Can you guys hear me or no?
Yes.
Okay, cool.
Yes.
So you have to have centralization to store the gold. You have to trust the centralization in that who's auditing the gold is for real, kind of like the stablecoin Tether. You know, there's billions of dollars there allegedly, but nobody knows what
That's
the reserves are in, and
that's
that's one of the problems.
That's
There is
why
a Go
go
ahead.
go ahead. That's why I'm not a huge fan of Kinesis, because it is centralized.
Well,
Oh, hey,
but
Don,
with what
I'll sell you pizza for some gold coins if you want. Offers out there.
two
Well,
two
if you guys
pizzas.
think about what we're talking about here, what we're talking about here is very simple, and that is the word trust, right? Trust.
Right.
So if you could put trust on the blockchain, we've fixed all the problems that the world has. The
Well,
problem is you
that's
can't
what
put
Bitcoin is
trust on the
supposed.
blockchain, right?
Well, that is what
I mean,
Bitcoin is
Bitcoin, right?
supposed to do.
Right,
That's what
right.
it's supposed to do. That's its whole theory, its whole thesis is basically being trusted. So you can't take my Bitcoin. Nobody can take my Bitcoin, right? That's the
The
whole
question,
thesis behind it.
some people value it and some people don't. I was going to share.
I
There's
think
one other example.
I think American commerce, international commerce, world commerce is already being served by Visa and MasterCard. I'm not quite sure we need any of these other new inventions.
Well, in terms of gold,
Oh,
there is one more example. So Kitco Gold partnered with the Royal Canadian Mint, and they are using blockchain with iTrust Capital's self-directed IRA. So when people invest in iTrust Capital, it's mostly a crypto IRA, but there's a physical gold option in there. And what they do is through the blockchain, you're actually buying fractional shares of gold bars in the Royal Canadian Mint or silver bars. Pricing's pretty legit. It's $50 over spot, selling 50 under spot for gold, or $250 above spot for silver, and $1 below spot to sell. And they track it all. It's just through a private blockchain. It's not decentralized. It's totally centralized, but it partners through Kitco. And if people actually want to
Room
take
has gone
physical,
quiet.
oh wow. I don't know if Jim can hear me, but I think everybody else can. But if you want to redeem your physical gold, then what they do is through the blockchain is they transfer the value that you have in the fractional shares to Kitco, and then you can actually use that value to take possession of any of their physical products at whatever premium they have at that time. So it's pretty cool that the technology that you guys are talking about actually exists in two different places. One is they're trying to start their own chain, but another one's just a private kind of intra-commerce blockchain that's working with some of the biggest names we know. So the technology is working.
Anybody interested in selling calls or the idea of writing calls on future contracts? I can talk about that a moment.
Hey Jim, I don't think Jim's. Just go ahead. I'll message him.
Yeah.
Oh, hey, Hutch, just before you go on, just to make a quick distinction, what tax that crypto gold you were talking about that's similar to Tether, it's different than what's proposed by people similar to Peter Schiff, is the blockchain coin that you have must be redeemable in gold. If it's not redeemable and it's just pegged to the price, it's not the same thing.
Yeah, no, I get you, Nostra, and allegedly it is. If you read the paper, it is. You have to have like a certain amount of it to be able to redeem it, but allegedly it is.
That just kind of sounds like an ETF that defeats the purpose. It's similar to what they want to do is before 1933, an average American could show up with $1 to any bank branch and they could redeem it for a gold coin. That's what they want. That will be a purpose of a crypto gold back.
No, I agree. I think it's great. I think the only distinction is that they're using blockchain technology. So it's just cool to see that two of them actually are working. But to Don's earlier point, the only kind of real disconnection in that world, and like the stuff with Peter Schiff, like I like crypto, I like gold. Peter Schiff makes it a little kind of divisive, and crypto people don't like gold, but I see the value of both. And I see the two worlds colliding. But one of the challenges is most crypto people want full decentralization. It's just literally impossible because of the weight, like we talked about. You can't ship it, and you need people to house it, and you need people to measure it, and you need people to report it, and you need to trust those people that the information that they're putting on the blockchain is accurate, which is a little bit of a challenge.
Why? Historically, that's never been an issue before. And when you're talking about crypto, I mean, crypto is centralized. You have the miners, you have the exchanges, you have the internet, you have the electricity grid. So it's not as decentralized as you believe. Because when it comes to gold or silver, there's nothing more decentralized than gold. You have gold in outer space, right? You have aliens who have gold, right? It's decentralized. There's no main person making it, right?
Wait, aliens have gold?
Yeah, it's all over the universe, right? It's in their galaxies, their Milky Ways. If they
Dude,
have,
I'm 3 drinks in and we're talking about aliens with gold. Let's do it, dude. Let's fucking go.
Here's the thing: if aliens
Is there
show
a
up,
stock
what
for
do you
that?
think?
Or?
No idea, but if aliens show up, what do you think they're gonna want? Gold or Bitcoin?
They're going to want gold. Gold is created in the center of supernovas. That's the thing about gold. You can't create it. People have been trying to create gold for 1,000 years.
They're gonna want all the women.
I was in a crypto space recently. And one of the guys rebutted me saying that no, in fact, gold can be created in a lab. And I said, okay, tell me. And he said, well, they've created gold inside of a inside of a controlled environment at a laboratory. And I said, yeah, they've created like elementary gold, like literally like microns of gold. Like it's, and they literally disappear in a fraction of a second. It's like, it's not the same thing. You cannot create gold. I mean, the amount of energy it would take to create, like let's say an ounce of gold is astronomical. So the reality is you cannot create gold. I mean, these people are just, it's if you spend enough time in some of these rooms, I mean, it's mind blowing.
Yeah, they're just creating isotopes.
I have a related question for the panel here. See if anybody has any opinions. Whether this is like that shit crazy or feasible. So it's not an original theory. I've heard multiple people talk about it. Jim Rickards, Jan, somebody, a couple other people, just to give them credit on it. So there's a lot of theories going around that if you look at, I put it in the nest earlier, that central bank gold buying activity changed just drastically after the GFC. It went from just a huge selling year over year. It's consistent buying every single year. So one person has to buy. I kind of just keep it simple. If the central banks want an asset, so do I. I at least need some. It's very simple to me. But like, why do they want it? So the U.S. has their gold, whatever, 8,300 tons that we have, valued at maybe $40.
Do we have that though, Austin?
Whether we do or not, we have it valued on the balance sheet at like $40, right? And a lot of these other banks have it valued pretty low on their balance sheets. So what do you guys think about this? The possibility that if they need to, basically the backup plan or the reason they're acquiring this gold is basically they can all at the same time decide to revalue the gold on their balance sheets, wipe out a huge portion of the debt with that gold, and then basically bring debt to GDP down from, say, 130 to 60, get a fresh start, and then use that gold to back a central bank digital currency and give it, using air quotes here, legitimacy. What do you guys think?
That was actually my next question for Don, actually. And if they ever did that, as a follow-up to that, if they ever did that, how would that impact miners, if at all? Let's say they revalued the stuff to $5,000, $10,000, or $20,000. Are they going to allow us to continue to publicly trade these things?
Sorry, guys. I've been paying attention, but that last question I missed. Can you rephrase it?
So, what are the odds that the central banks around the world revalue gold, use their holdings, use this increase in value, right, to pay off debts, right? They get their debts down by revaluing gold. Mm-hmm. All right. What are the odds of that happening? One. And two, let's say they did do that as a follow-up. What would that mean for miners if gold were revalued anywhere, say $5,000 to $20,000? Would we still be allowed to publicly trade these things if they were to take that route?
Well, you know, a week ago, I would have said the odds are very low, but after those comments from that Dutch banker, now it sounds like it's not crazy talk. I mean, that's exactly what he said. He basically said we're going to use, I forget the term, but it was basically we're going to use our gold to backstop our assets. So if they're going to use gold to backstop their assets, then they would revalue gold higher. So they actually came out and said it in public. So it's not crazy talk. It's a possibility. I think it'd be great for the miners. I think the miners would basically jump in value. I'm not expecting any type of revaluation like that because it would have to be done globally. It couldn't just be done in Europe, right? You'd have to revalue gold on a global scale. So I don't expect it to happen.
Don, why does it have to be on a global scale?
Because you can't have two prices of gold. Europe can't have one price and China another one. That won't work.
Right, and the market would arb the difference, right?
Yes, it wouldn't work. It arb the
we had
difference,
that-
exactly.
We had that in the 1960s, where gold was a different price in Hong Kong, it was different in Paris, and the U.S. had a peg at 35.
and it blew up.
Charles de Gaulle
It blew up.
redeeming
Yeah, it
the
blew up.
dollars for gold. Yeah, exactly.
Yeah, can't
So
do it.
but if you had, let's say, China have a gold-backed currency, that would have a lot of inflow. It would attract capital. They would want to go and use the yuan, right? It would affect the people who aren't on the quote-unquote gold standard.
You bring up a good question. The first one I think is moot, right? I don't think they can do that. They'd love to do it, but I don't think they can. This one here is actually more interesting because I think that this new BRICS currency is going to be a quasi-gold standard, depending on how much gold they stick in there. And so if they're on a quasi-gold standard, their currency is actually going to basically be more valuable than other currencies, in theory. And more people might want to own it. And it could basically create, kind of it could derail the dollar.
I have heard Mr. Rickards say that if there was going to be a reset and the United States decided to back their currency with a 40% gold backing, he said it's not that we don't have enough gold. He just said the price is too low. And he said they could easily do this on a Sunday by saying we're going to be $9,950 bid, $10,050 asked. So if people wanted to sell gold, they'd get $99.50. If they wanted to buy gold, they'd buy it from the Fed or from the United States Treasury at $10,050. And that could happen on a weekend. That's kind of what he had mentioned in a commentary that I listened to him. So it's easily done. He's one of the sharpest guys in the room. So.
It's not easily done. And the problem is back in the 1940s and 50s and 60s, Asia was basically a non-entity. You basically had Europe and the United States running the show. So they could do things like this, revalue gold, for instance. The United States revalued gold from 30 to 35 in the 1930s. Today, not so fast. I don't think. I think because of Asia, and you have this basically a chasm, if you will, between Asia and Western civilization. The chasm is that, hey, we want to do things our way. You guys do your things your way. There's not, they're not even part of the G20, which is a complete joke. China's not part of the G20 today. So there isn't, they can't sit down and revalue gold. I just don't see it happening.
So who do we think's gonna fight against that? It seems that pretty much every country that really matters from an influence perspective holds a meaningful amount of gold. I would argue it seems that China has multiple times more gold than the U.S. and more than anybody. Russia has a lot. India has plenty. Europe has a lot of gold. I think revaluing gold is one of the few things I think the world could agree on right now.
Interesting.
Maybe
if
that's
it
why
happens,
the U.S. wouldn't want to. Right? It's like
it would be a beautiful thing if it happens, but I'm not expecting it.
Really, I think it boils down to more of they're going to have to do it as opposed to they want to do it. It's when the currencies collapse, the only thing you could do is go back to gold. I think that's more of the scenario that's actually going to play out.
Well, one thing that could happen is instead of kind of revaluing gold higher, it could basically be market based higher. In other words, the COMEX and the LBMA would both break, and the price of gold overnight could go up, $500, for instance, and then it could just, the
I
market.
think somebody said that earlier, like an hour ago. Oh wait,
I think it was O'Hare.
The market
I
price
think that's
could
exactly
just
what's
start
going to happen.
going
Don.
higher.
I think that's exactly where we're
Yeah.
going to be. I think we're going to just you're not. It's like these gaps in equities, where you wake up one morning on a Monday and the stocks are either up
It's
20
higher.
or down 20.
Yeah.
And you're not going to be able to, if you're short gold, you're just not going to, it's just going to open up at, $2,500 an ounce, and that's it. And then it's going to run from there. So I think that's inevitable. I think that's going to happen.
Yeah. Somebody did mention that. Now I remember. Yeah. I think he said $350, $500, and one you wake up and it's up $350, $500. I think that is probably a much more possibility than countries all getting together and say, okay, let's revalue it at this price.
Yeah, it's not going to be a coordinated effort. It's just going to happen. I mean, the reality is, it's like there's an old saying: "He who has the gold makes the rules." Right? That's the golden rule. The golden rule is: he who owns the gold makes the rules. And the reality is, like, this is one of the reasons why central banks around the world have been buying gold, quietly. They don't make any waves doing it.
I'll tell you what people should really think about is the GSR is going to shrink like crazy. So if gold gets revalued higher, gold jumps up in value, silver is going to explode.
100% agree. I think the gold silver ratio should be 50 already.
Yeah, silver go to 80 or 100 overnight. Silver, it should be 80 to 100 now.
Yes,
but, I think that it's just you're gonna wake up one day and it's just gonna be $80, $100, whatever.
And the thing that makes so much sense about that is that nobody owns silver or gold today. So if silver jumped to $50 tomorrow, everybody'd be screwed. If you don't own it, you're screwed. You're too late to the game. Yeah, you're not in the room. You're done. Right? And everybody that has gold and silver, like, we're instantly rich.
Well, the thing is, like, the people who don't own the silver or gold, they're not going to necessarily be screwed. It's the people that are short gold and silver, they're going to be royally screwed. So,
well, it depends on their fiat. If their fiat goes down, and the precious metals go up, those who have the precious metals are, in a much better position. Maybe not screwed. They're screwed in the fact that they can't get their hands on it cheaply.
Right. Well, that's the same thing as any asset. Look at the financial what happened after the financial crisis. Anybody that had paper assets over the last 12 years has made out like a bandit. The average American doesn't have $400 to, like, I was just reading an article, I don't know, a week ago in the Wall Street Journal or something like this. So this idea of, like, the average American doesn't have $400 to scrape together for an emergency. I mean, the reality is most people that had paper assets, whether you had stocks, bonds, real estate, you made like a bandit during zero interest rate policy over the last 14 years. Everybody else got left behind, and now we're dealing with this inflation. So, to see gold or silver kind of jump up, to where they should be, I think that's an inevitable thing. I think that's going to happen.
Right. Yeah. And since we're talking about these kind of far out possibilities, one thing that I think could easily happen is some type of a financial crisis where the debt kind of just totally blows up, if you will, and the federal government can no longer basically make their interest payments, and they have to basically reset the dollar in some manner. I think we're actually facing not so much a reset in gold, but where gold will just go up, but we're gonna face some type of a reset in the dollar, kind of a Bretton Woods 3 kind of thing. I think that's very well could happen. Some type of a massive reset on currencies. And where people really get burned hard. So that's where your wealth, I think the US dollar could basically lose 30%, 40% of its value in a single day. So if you're at your assets, you're going to lose, if you own assets, you're going to lose, the next day you're going to lose 30% of your value. I think something like that is very possible.
Don, there's been many stories of countries who've experienced hyperinflation who have similar stories to that or even worse. There's one guy, I forget which country it was. One day he had enough money to buy a brand new car. The next day it was
Yeah.
literally worth nothing.
Yeah, I think that could happen. Something similar to that. Yeah.
Yeah. So there's a lot of people who don't own or aren't short the metals that will suffer
Right.
as a result. What O'Hare was saying.
So it's not. Yeah. So it's not. It doesn't appear to be hyperinflation, but since the currency is worth less, it is hyperinflation. It's like a quasi hyperinflation, but the government forces it on you. It's like one day, the dollar is worth this, the next day the dollar is worth this, and there's nothing you can do about it.
Gradually, it's suddenly.
Gradually,
And the
suddenly,
beautiful thing about gold and silver, which are tangible minerals that you can hold in your hand, you can put in a safe. It doesn't matter what someone else thinks. It is what it is. So if the price is trading at X amount, that's the price. I don't give a fuck what you think it's worth. You can think it's worth 1,200. It's worth 3,000. That's what the world is trading.
And that's where
the beautiful thing about the gold and silver. It doesn't matter what people think it's worth. It's worth whatever people are willing to transact in it. That's what it's worth.
Right. And that's where the unobtainium kicks in too.
Think about your house. Like my neighbor can think his house is worth 1.8 million or 2 million. The house is only worth what someone's willing to pay, right? I don't give a shit what you think your house is worth or what your car is worth, or the market is dynamic. It's worth whatever someone else is willing to pay. So this is why it's important to have something that's tangible like gold and silver, because it's rare, right? It doesn't rot.
You make a great point. And this is what I've been trying to instill in people for years and years and years, is that we're going to reach a point where you're going to want to have this stuff. You're going to want to have some physical gold and silver. And nobody really is thinking that way. I mean, a small group of people. It's going to happen very soon. And that's what I've been saying, is that people are going to want to own gold and silver. They're not going to be able to afford gold. It's going to be too high. So they're going to want to buy silver, and it's going to create a shortage because all these people want to grab some.
Yeah, I've been doing a lot of reading on the Holocaust. I was born in Eastern Europe. I immigrated to the U.S. when I was in my I was 7-8 years old when we moved here from Eastern Europe, and I've been doing a lot of reading. My wife and I, full disclosure, I'm part Jewish, half Catholic. It's kind of an interesting mix. I say I'm Jewish from the waist down. That's a joke, but anyway, The point is that during the Holocaust, during the war, during World War I, World War II, the only thing that mattered, the only thing people used to transact to get out of the mess that they were in was gold or silver or diamonds. Now, diamonds are interesting.
I was going to say diamonds. Yeah.
Diamonds can be manufactured in a lab, and that's true. And it's very, very difficult. It's almost nearly impossible to distinguish between a man-made diamond anymore and a natural diamond. However, gold and silver, you can't make in a lab. It is what it is. You have to fucking go and mine it. You gotta refine it. You gotta, it's a process. And so like during the war, like during, and I'm not saying we're gonna have a war. I would hate to see a situation like we had in World War II, like during the Holocaust. But my point is that the more I read about what role gold played during the Holocaust, it's very interesting. That was the only thing that was transactable for people. They didn't give a shit about Deutschmarks or Swiss francs or or English pounds or US dollar. None of that paper currency mattered. What mattered was fucking gold. If you had gold, you had freedom.
O'Hare, the same thing happened in Vietnam. I've heard stories of families paying 7 ounces of gold to get them out per person.
Yeah. Nobody today is buying gold and silver. That's why I'm saying when we get into the 30s.
And that's the beautiful thing about gold and silver, is that you didn't have to explain what the dollar was. You didn't have to say, listen, I got these Deutschmarks that are literally worthless if the Germany loses the war, but I'm going to give them to you if you get me an airplane ticket or a boat trip to fucking Cuba during World War II. No, that didn't matter. What mattered was, hey, you have fucking gold, I can get you out of here. Okay. So
when I started traveling, I started bringing an ounce or two of gold and an ounce or two of silver, just in case the shit goes down when I'm in a foreign place.
The beautiful thing about gold and silver is you don't have to explain to somebody else what it is. They fucking know. They just know. They just know. Here's gold. Here's silver. Here's what I need. Make it happen.
Hey,
that being said, go ahead.
The British special forces, the pilots carry gold sovereigns with them in case they're stuck in foreign lands and need capital to get out.
The U.S. military, the U.S. Air Force does the same thing. U.S.
Right,
Air
there
Force
you
Yeah.
go.
fighter
There you
pilots
go.
have the same thing, and which is kind of ironic. They don't have a Bitcoin. It's not like they have a fucking USB drive in their pocket with a fucking Bitcoin wallet, for fuck's sake, right? Give me a break.
Yeah.
I will say I was traveling in Omaha. I bring at least an ounce of gold and 1 or 2 ounces of silver. And my friend stopped by this cigar shop and he wanted these really nice cigars. And for some reason, their credit card processing thing wasn't working. And it was like 17 or 1800 bucks. He had a little bit less. And I whipped out. I go, how about this? How about I trade this? And the guy looked at me and he was like, what is that? And I go, it's an ounce of gold. And he's like, oh man, I bet you if the boss was here, he'd do it, but I don't know. And I was like, just let him load up 1800 bucks of cigars and we'll call it good. But he didn't have the balls to pull the trigger on that. But I agree with you. I saw somebody posted on Twitter, hey, this is my travel pack. And now when I started traveling, I just in case the shit goes down, I bring a little physical with me.
Yeah, Robert Kiyosaki has an interesting story. He traveled in the military. I think it was Thailand or something like that. And he noticed a little village that was near a gold mine. And he thought that he was going to go get this excellent deal because this village was very remote. It was isolated and it was very small. And so he thought he was going to kind of, haggle these guys and get a great deal on gold. And they said, no, I want spot price. They knew what it was worth. Right, they know. People know gold. Right, this is just the way it is. But with that's probably a good place to call it. It was a great time with you, Don. You tell us a little bit more about your newsletter and your book.
Well, I guess I can. How many people are still around? Everybody's still sticking around. So, yeah. So, all right, great. So, yeah, if you own any mining stocks, you should read my book. So, just go to Amazon and search for Don Durrett. You'll find my gold book. Anybody that wants a free trial on my website, just send me a DM. I'll set you up. Thanks for that. And I'll be back in a month, the first week of December.
Yeah, look forward to it. And like I said, look, I subscribe to Don's newsletter too. And there's been more than one occasion when I wanted to know something about a company that comes up on my radar. And it's sure enough in the list with all the details. So it really does have everything in there. So, I endorse it. It is a great resource. I love it a lot. But Don, as always, very well thought out answers. You always go into great detail to explain yourself and your reasoning, and you couldn't ask for a better guest. So we really appreciate you taking the time to come in with us.
I'm gonna give you just some advice, Don. You need to change your Twitter handle to the Gold Don.
Well, everybody knows me as that. It's hard to change things, but thanks.
Hey, great space, guys. Yeah, no more of these. People need to go in and educate themselves on the value of having gold and silver.
Oh, we're so early, guys. We're so early. We're gonna have a bunch of people in here in the future.
I mean, I'm looking
right
at
now.
There's like 70 people, 65 people.
Yeah,
we're
so early.
Like 1,000 people. You know what I mean? Like
absolutely.
Like I was in an NFT space this morning. I was just fucking off, having coffee and a fucking donut, and I'm like, oh, the NFT. There's 800 people in this NFT space. I'm like, are you fucking kidding me? Are you fucking?
Yeah,
they're
we're
fucking
early.
like little pictures, little gifs of fucking apes and shit. It's like, dude, are you guys fucking kidding me? 800 people and there's like 60 in there. It's like,
well, think of it this way. Let's say you go to the
maybe
grocery
we're doing
store.
it wrong.
Let's say, well, no, people just aren't interested. Let's say you go to the grocery store and there's like 100 people in there. If you ask every single person in there if they own any physical silver, they'd all say no. The whole entire store. that's how early we are.
It depends on where the store is located. If you go to Asia, I'm pretty sure 100% of the people.
I'm talking about the U.S. I'm talking about the U.S. Right?
The Western world, yes, absolutely.
There's none of them own any silver.
There's that famous YouTube video of the Dice guy who was saying
Mark Dice.
Mark Dice.
It's less than 1%.
Silver, yeah.
I guarantee you, it's less than 1% are stackers.
Oh, definitely. Maybe even less than 1.
Yes.
But the problem is that, like, if you really divide up how much silver there is, I mean, there's not even an ounce hardly for everybody.
Yeah. Wow.
Yeah, it's only it's something 3 or 4 ounces of gold if you distribute all the bullion to everyone in the world alive. So that's a good starting point. If you don't have any, just get a few ounces. You have your share, right? The global wealth in gold, and then anything beyond that, and you're starting to do good.
Just think when everybody starts running to it, when silver gets over 30, it's going to be impossible to find.
Yeah,
locally.
unobtainium, unobtainium.
Unobtainium, it's coming. We'll end on
All
that.
right.
Zach, I hope that happens next week, guys.
I'll take next year. I'll take next year.
Okay, I can settle for like first quarter of next year. I can settle for that.
Well,
You have
hey,
options expiring, go ahead.
yeah.
Say that
Well,
again.
you know, the central banks are buying 300-ton well, right? So they're buying it hand over fist.
Yeah, I think we're getting close, guys. I like the action that we're seeing. Look, listen, one of the things I've said for weeks now in a lot of these spaces that I run is that, look, the fact that gold is where it is today, given where interest rates are, given how high the dollar has run, it tells you everything you need to know about, the potential for gold going forward. I mean, a lot of people were writing gold and silver off, and here we are. I mean, gold and silver are doing just fine in the face of fucking 75 basis point moves, literally every fucking meeting. So what does that tell you? There's still the bid for gold is there, and I think it's just a matter of time before, like I said, I'm going to wake up on a Sunday. I hope tomorrow is that Sunday. I hope tomorrow is that Sunday where I wake up and it's up to $200-$300 an ounce.
Well, what to look for is a credit event, right? There's a quadrillion derivatives out there, and those derivatives are all based on interest. They're all based on interest rates, and they're also based on fiat currencies. So they're all leveraged in the wrong way, the wrong direction. Those derivatives are going to start bumping up. It's just a matter of time, because interest rates aren't going down, right?
Right.
Sorry, I was just pouring myself a glass of wine. You guys are all so sober, man. Fuck, you guys, man. It's Saturday night, man.
I will tell you this. Harry, you had mentioned earlier 2015, 2016, right?
Yeah.
And all the stuff that was happening then, and you had mentioned that a lot of the same things are happening now. That's actually true. You really see it in the charts also.
Absolutely.
There's a lot of confluence now with what happened both in 2015, 2018 even. A lot of the same markers are there, including commercial positioning, institutional positioning, whether it's long or short. I mean, the amount of confluence is extraordinary between right now and the prior massive runs, especially in silver. Even in the ratios, if you check the GDX in energy, tech, oil, it doesn't matter. Uranium, the S&P, it's all the same. It's all pointing to the same historical levels of being oversold. Everything's lining up in the charts. Beautiful.
And,
All right, we're
that's
cool.
actually, I would say it's even better today than it was in 2015, 2016. The amount of leverage in the system now is so much greater than it ever was. The setup now is much, much better, I think.
Yeah, I agree. That's why I think, I do see a possibility of getting this flush down one more time. I think that's a reasonable thing to expect. But I'm not sure that we set new lows in a lot of the equities. We might have already got them. We might retest them, but I'm not sure we break them.
Oh, we're going lower, much lower this month.
Wait a minute. But you're talking about, when you say equities, you're talking about the S&P 500, the NASDAQ. You're not talking about gold and silver equities, right?
I'm talking about gold and silver equities, if and when we sell off with the broad markets.
Well, no, and Don's saying much lower. I don't think that's what Don's.
Yeah.
I think
I was talking about when you say equities, I'm thinking S&P. They're going a lot lower there.
Yeah, I agree.
The silver and gold equities, they might have bottomed. I think the silver equities have bottomed for sure. Gold maybe too. Yeah.
Yeah, the AG chart in particular is beautiful. A lot of them are. They look quite good. They look like they bottomed, and they're bottoming. They're putting in rounded patterns, inverse head and shoulders patterns. It all looks very good.
Man, just looking at those buys of AG below $7. Sometimes I just look at the trade ticket, just put myself in a good mood. It's unbelievable.
Yeah.
Unbelievable.
Yeah, I posted a public tweet, all right, where I encourage people to buy particular equities at particular prices. and I was off on the price by several percent, but I was only off on timing by a day. The next day, September 24th, was the low, and we are up in many of these silver stocks by 40% since then. So
Nice.
it's been quite good. Yeah. The only ones that are flat or down are the ones that are still building their mines. And Don alluded to this earlier.
Yeah.
Because inflation.
I think the next spaces we have, first week of December, I think we're going to be able to call a bottom in December. That we're past it. Yeah. I'm confident that's going to happen. We're that close to having bottoms here. We're really close. After 27 months.
Houston wins.
It's been a long wait. Yeah, I expected him to.
Yeah, well, man, I'm in Houston. I don't know if you hear them screaming in there. Everybody's about to start honking their horns and doing all kinds of crazy crap around here. I'm in the heart of it.
The baseball gods gave one to Dusty. He was due.
Yeah.
Is he the guy that made that big wager to make $15 million?
I heard about that. Jeez. Everybody got a free.
Would he buy? Would he bet on it like pre-season or something?
No,
everybody got a free bed in Houston, and everybody in Houston got a free bed.
That's I've done that several times. I got a whole bedroom set from Trump's election. Oh yeah, yeah. I got the best mattress in the store too. Got it for free.
Did you get a My Pillow with it?
Wow.
Yeah, I got the Temper Breeze. I'm telling you guys, this thing, it doesn't matter what the temperature is. The mattress is always cool. It's pretty awesome.
That is awesome. All those people getting a free bed. I forget how much money it was. $15 million worth of free beds or something. It's a lot of free beds.
Yeah, he loves to do it. He's a local celebrity down here, and he's always giving to charity. And
no doubt.
Yeah, his story, by the way, is incredible. I mean, he has a pretty tortured past, a lot of drug abuse. I mean, he had a hard time for a long time, right? And he turned his whole life around. Now he's one of the most wealthy men in all of Houston. He owns one of the most prominent franchises. Yeah, he's a huge success story.
He'll probably give a lot of that money away.
Yeah, he does. He does. Mattress Mack. Yeah.
I think he was going to win $75 million.
Yeah, that's how he hedges. That's how he hedges the bet on the free furniture. Yeah.
It's insane.
Yeah, it's pretty
Good
cool.
story.
Yeah, so when I won for the Trump election, I don't know, a few days after the election, they said, "Okay, come on down," and you show up in line, and there was, oh God, the place was packed. And you get up to your turn, you get to the desk, and they just hand you a check right there.
Oh, you didn't get a bed with that?
Oh yeah, I got a bed. Oh yeah.
Did Trump come with the bed?
Yeah. Well, there was a Trump impersonator working. So. No, it was a great day. It was a really great experience, man, because everybody was so happy.
Hey, do any of you guys think Trump has a chance in 2024?
Yes, I do. I do.
You don't think the media has destroyed it these last 2 years?
Yeah, he obviously can't be destroyed. The man's invincible. It's like, if they had anything on him, they would have got him by now.
Trump is like a cockroach, dude. You can't kill him, dude. He just keeps coming back.
I'll tell you this. I was a strong Trump supporter then. All right. I supported him all throughout his presidency. I didn't love everything about him, but to me, Trump was a signal because he was the outsider. Lots of the system hated him. The left really hated him, but the right hated him too. So for me, the primary reason I voted for Trump was that he was the tell whether the system could be reformed through the election process. And the answer, in my opinion, is a resounding no. He proved how deep the deep state is, right? How deep the roots go. He proved, look, Trump, just through his existence, just by being in that office, got countless people and media organizations and outlets to expose themselves in their true nature. And the fact that so many people didn't wake up to that and didn't see what was happening in real time and the attempted coup blows me away. It blew.
The
It was
one
a
thing
huge
that
red pill.
I am just so glad that Trump was able to drain that swamp in D.C. That was the best thing that he ever did, was drain that swamp.
He didn't fucking drain the goddamn thing.
That was a joke. That was a
But
fucking joke.
That's the whole point, though.
but wasn't he the wasn't he the trigger? It's all gonna be in hindsight, right? But wasn't he the trigger that basically was the dissolution of the United States?
Trump is the ultimate irony. Trump used to be a Democrat, turned fucking Republican, turned super right wing, won the presidency. Literally, Trump is the antithesis of what this country is all about. The guy is so full of shit. His eyes are brown. I voted for him in 2016, by the way. I'm a Republican.
Well,
I'm in the middle. I'm in the middle now.
I want to repeat my question. I have a yes/no question. Was he the trigger for the dissolution of the United States?
I think so. I think he was the match. He was the fucking match, dude.
Yes. I think so. I think he was the match.
And
we can't put it back together now.
Exactly. And look, we had talked about Bernie Sanders earlier. Okay.
Yeah.
And that was incredible because for me, as an 18, 19-year-old young, impressionable man, I had the luxury of finding Ron Paul throughout his first presidential run. A little bit before that, he taught me about the Fed. He opened me up to gold. He opened me up to the monetary system. He was my red pill, right? He was my gateway. And
how much did he lose this year?
And let me tell you something. When I used to watch like Fox News and stuff, right? Because I want to see when the way the media treated him on the right, it exposed to me how fake the media was on both sides, right? Because I thought I was clever and I realized that the leftist media was all propaganda and stuff at a young age, right? And then I realized it was the same both ways because of the way this man would win primaries or get second place and they would skip right over him like he wasn't even in the running. And they wouldn't even talk about him or his performance, right? And then and then they did the same thing to Bernie Sanders. They practically cheated the guy and stole the election from the guy and rigged it against him. And the fact that it didn't wake up so many people on the left and they still continue to support the party. I left the Republican Party because of Ron Paul, right? I didn't vote for him anymore until Trump. But I voted for Trump because to me, in my eyes, he was going to be the tell. And it's like, I don't care whether Trump is a liar. I didn't care about any of that because he was there to expose.
Let me tell you something. I have a brother. I have a younger brother who's 12 years younger than I am. Okay, my parents had a couple kids way late in life, and my younger brother, he's a diesel mechanic. He's a union member. He's a die-hard fucking Trump fanatic, and he and I have butted heads over this issue for several years now. And I just go back to this question, and I have friends that work for like the railroads, Union Pacific, Burlington Northern, all these guys that are like union guys, dyed in the wool, fucking Republicans, fucking Trump fanatics. And I just ask them, and they're like, Trump's our man. He's just like us. I'm like, listen, Trump lives in a $50 million penthouse, shits in a golden toilet that he brags about, fucks fucking, women left, right, and center. Okay, he hasn't been in a church and maybe never, and he's your guy. He has everything. Like people think that Trump is their guy. He's just like, for whatever reason, I just don't get it. Like he has been able to like hoodwink everybody and say, I'm your guy because I'm just like you. Except the only difference is you live in a fucking $120,000 fucking ranch home in fucking Kansas, and I fly around in a Gulfstream and shit in a golden toilet. It's just mind blowing how like these regular people in America think that Trump is their guy. Like it just blows my fucking mind.
Oh, Eric, to make a distinction there, candidate Trump was completely different than President Trump.
You're absolutely right.
True.
But the one thing Trump did really well is spin the story. He's a fucking great storyteller.
Yes.
Well, the takeaway.
Let's just fucking win. How about we just fucking win and fuck all that?
I think, and again, look, the takeaway. The takeaway from the
fucking win.
Okay. Look, the takeaway from the entire Trump presidency, I think, is that you're not going to reform the system through elections, right? Because they're either corrupt to start with, or the system is too big and too deep, and you can't. One man can't do anything.
Well, you remember he changed his
I
complete
don't.
stance when he was a candidate. He talked about how the Fed was ruining everything and he
I
needed higher interest rates.
yeah.
And right when he became president, he was
I
pretty much
don't. Yeah. I'm not that cynical. I think that Trump potentially could have saved the country. He ran as a populist. If he would have governed as a populist and he would have brought back, basically done away with globalism and brought basically manufacturing back to this country and reinvigorated the middle class, I think potentially he could have saved the country. But he didn't do that. He basically governed as a Republican, and globalism basically, stayed in place. I thought globalism was the key to his presidency, and he didn't attack that, or he couldn't attack that. But I thought that was the key to it all.
Yeah, and I think part of the, like what Nostra was alluding to, candidate Trump and President Trump was, first of all, Trump knew little to nothing about politics or how the world actually worked. He was very naive, and he trusted advisors who came and went. Okay, so you could see a lot of the
it was a revolving door.
Hey, buddy, you interrupt a lot.
Door.
Just hold on. His opinion changed often with his advisors, right? Because he had people he trusted, and this is a big thing about trust. If you understand Trump well and you read his books, right, he was relying on these people who knew better than he did, all right? And you saw these transitions over the time. I'm not giving Trump slack for this, okay? But it's pretty clear what happened is that Trump had no idea what the hell he was doing or talking about in many regards, and he trusted people who shifted him often. And I think that this was part of the reason for these changing opinions over time, because a lot of his advisors changed over time. I think it's pretty self-evident to me. I paid very close attention to the man, honestly.
I do agree with you. He's very intelligent, but he's also very naive, which is a strange dichotomy.
Yes.
He's very intelligent, like when it comes to dealing with people, dealing with the media, stuff like that, maybe even business acumen, but he's very naive in a lot of different areas. It's almost, in some respects,
You're talking
you
about
wonder
the guy who wrote The Art of the Deal.
He didn't write the book. He basically just
kidding,
gave.
Dude, I'm being facetious.
Yeah, he didn't write any of the book.
Deal.
The story behind that book's hilarious. If you've read anything behind that book, it's absolutely hilarious. The guy that interviewed him. I mean, the book was written. Does everybody know the story behind it? I'll give you the quick background. So he hires a guy to basically write the book, and the guy tries to interview Trump, and it doesn't work because Trump has a very low attention span. So he can't interview him. He won't answer questions. So the guy's going to give up on the book, and Trump says, "Look, just listen to me on the phone and then write the book." And that's how the book got read. He followed Trump around, listened to Trump talk to people, and he listened to his phone conversations, and that's how the book got written. Trump didn't write any of the book, by the way, none.
Yeah.
That's a fucking shocker to me, man.
Well, if you read the book, I read the book when he was running. And I tell you what, when he negotiated and he did a lot of things he did, it was exactly like the book, right? So let's say he wants to negotiate a deal for $100. He'll say 200, right, to get them to come down to 100. And then you make everybody freaks out. You cause this huge storm. Can you believe what he said? It gets a whole bunch of attention. Everybody starts talking about it. Then he compromises it down and gets what he wanted anyway. Yeah. You saw him do that all the time. Yeah. All the time.
Trump is the arsonist and the fireman. He's like both. He's the arsonist and the fireman.
Yeah, this is why I don't think he's going to win in 2024. It's because now we can see through him. You know, I think if he gets the nomination, I'll be surprised.
In 2 years, a lot could change. In 2 years, you might be looking at 20% inflation, the economy completely destroyed. So the incumbent is always losing.
From what I've been reading, he was supposed to. Apparently, he was supposed to come out this weekend and announce a fucking a run, something like that. Yeah. I think like this weekend, and maybe tomorrow. Who knows? But I agree. I don't think he's going to win. If he runs, I don't think the Republican Party can nominate him. I just don't. He's too much of a cancer now. You know, I just don't think they can nominate him. Look, I'm not a Biden lover. I think Biden should have never ran. I think the Democrats need a fucking different candidate. The problem with this country is, for whatever reason, we don't have like a fucking good like middle person, like somebody in the middle, a good fucking like
Trump.
middle person. We
Let's
just don't have that.
let's get to the facts here. Trump basically ruined politics for this country because he ruined basically the journalism. Journalism is dead now, and so now nothing can heal it. I don't care who runs on either side; they're not going to be able to bring the country together because Trump soured the country to such an extreme that both parties will never see eye to eye.
Hold on, Don. Don't you think the journalism was a problem before that? He just exposed it.
Yes,
Yeah, I
but
think so.
well, he exasperated it to such an extent, though.
No, but I meant
Look at CNN.
The
I mean,
average person saw
after
the
he was
media for what it
elected,
was.
look what happened to CNN after. CNN used to be a news organization,
But
but after
that's
2016, it's just dead. It's gone.
Well, so was
But that's
Fox.
my
Though,
point,
let's
Don.
be fair. So was Fox. Fox used to be a news organization, and since
I don't know if
Trump,
it
it's
ever
literally
was.
become, it was. I used to watch Fox, and you're right.
Okay.
CNN is complete. The problem is the media is really, the media is just like everybody else. It's bifurcated. It's either left, super left, or super right. There's like no middle ground anymore. We need a middle ground.
Right, but but they don't tell the truth anymore. Trump was right about that. Fake news. He's absolutely spot on, and I don't think it can be healed. And so, like I said, Trump exasperated everything, but he basically polarized the country to such an extent. We're not going back. I don't care who wins on either side. They're not going to be able to bring the country together. We are
How far do you have to go
bifurcated
back to get the truth?
Yeah, Don. But that is my point. It wasn't Trump himself. I mean, Trump was involved, obviously, but it was the reaction to him. This is why I said his existence, just being in that seat, exposed everyone else. The way the media treated him and everyone else, they all exposed themselves, right? And that's why he was such a necessary. He was the right guy for the right time.
The greatest thing that Trump brought to the American presidency was the words "grab him by the pussy." I don't think those words have ever been uttered by any American president on tape. Like that'll go down in the history. Like like literally, like when they think of Trump, it'll be like grab him by the pussy. That was President Trump. I mean, think about that for a second. You know what I mean?
I like it. I like it. I approve of this message.
I approve.
I think
this
actually all goes back to the 1980s and Ronald Reagan that really split the country, because Reagan was really the first conservative president in our era, this conservative era, if you will. And what Reagan basically did was split the country in two. And when he split it in two, it took a while for the left, if you will, to finally get angry enough, which happened in 2016, to basically put their foot down and say, screw it, we're burning the Constitution to the ground. But it all started in the 80s, in my opinion. And now it's basically completely blown up. And there's no way, it's Humpty Dumpty. You cannot put it back together again. I think it's going to be very obvious over the next years that America basically is going to go a new way. I don't know what way it's going to go, but it's going to go something different, if you will.
Let me ask you guys, is there a viable middle ground candidate out there that you guys know of? Like, is there somebody that's a viable candidate that's in the middle?
Well, it would definitely be a liberal, because the conservatives aren't going to allow anybody in the middle, right? They'll burn them to the ground. There'll be a rhino, right? So it'd have to be a Democrat of some type. But the problem is the Democratic Party has moved left. And so if they bring in a moderate, he's not going to be able to corral the left, if you will. It's not going to happen.
What's wrong with Mitt Romney?
Oh man!
I know he's not going to run.
Well, he's not accepted. He's not accepted by the Republican Party, and he's not going to be.
I know.
The problem with people in the middle is that if you need to take 100 core positions, you could distribute 50-50 in an infinite number of ways, and you're never going to appease enough. Nobody wants somebody in the middle, honestly. Nobody wants that. That's why you never see these third parties taken off. Nobody actually wants the middle. And the truth is often not in the middle anyway. I mean, both sides are right about some things. Right. It's this whole illusion of being in the middle and being above it all is complete nonsense. That's a waste of time. It's very pretentious. Right. Like the truth is where it is. And sometimes it's on the left and sometimes it's on the right.
And people recognize this. Nobody wants the middle because the middle is essentially nothing. Everybody kind of loses. It's like, what does that even mean to be in the middle? You could be in the middle 1,000 different ways. It just doesn't mean anything.
I don't know. I think there's a big chunk of people that are in the middle.
Well, like
it's
more
just the
moderate,
party.
more moderate,
Yeah.
more moderate. In the
It's
middle,
just
I
the
just mean more
it's just
moderate. You know.
it just is the parties themselves. It's not the people that have frayed left and right. It's the parties that have frayed left and right. And then Bernie Sanders moved the party to the left because it was the only way to basically go counter to the Republicans. They stay in the middle. They can't, they really can't change anything radically. They want a progressive radical change. The only way you can do that is to go left. And now everybody sees the insanity. The further you go left, the more insane you get, basically.
I would say the same thing for the right. The further right you go, the more insane you get. So it's like,
Absolutely.
There's so much polarization in this country right now. It's just really fucked up. It's like you got literally, literally, I have a 35-year-old brother who's just completely on the far right, and then I have friends on the very, very far left that think you need to get fucking jabbed 75 more times. That think you need to work. I mean, the whole COVID thing, of course, was a big conspiracy. I mean, literally, it's just this. We have gotten to a point in this country where, like, it's fucking mind blowing. I feel like I'm on an island, being in the middle. You know what I mean? Like everybody needs to get their shit together and fucking I just don't understand, dude. It's just
let's fucking go.
So here, what you're saying is you're 47.
The one. Yeah, the
it's
one
just crazy. It's
the one,
fucking crazy.
Yeah, the one long shot that possibly could happen, but I just don't think it will, is that the conservatives recognize their weaknesses, and if they recognize their weaknesses, then they would go to the middle. They would recognize that over here on the right, we're never going to fix the problem.
Well, even on the right,
and if we don't fix the problem.
I would say even on the right, though, Don. I mean, there's the hardcore like Trump constituency, but I think even on the right, there's a lot of moderates. I think there's plenty of people on the right and the left.
It's possible.
To the middle.
It's possible for a leader to basically expose the weakness of the Republican Party, and say, "Look, if we don't attempt to
fix McConnell, that's the weakness.
If we don't attempt to fix the problems, if we just basically keep our agenda, if we look at our platform, the current platform, this platform is not going to work. We have to expand the platform, and if we don't expand the platform, we lose America. Now, I don't think it's going to happen because I think they're content with their platform, but that platform will never fix our problems.
Well,
so they have to expand the platform, and I don't think they will.
Well, Trump,
but that's the long
did
shot.
That. Trump did identify a lot of the weaknesses of the Republican Party, like Hispanic voters. He turned them out in record droves.
Well, when he ran as a populist, he did, but then but when he governed, he governed as a Republican. So he adopted the platform.
The 2016 election saw extraordinary Hispanic voters going right, especially in historically leftist areas, particularly in like Florida. I mean, they came out for him in massive support. That would have never happened without him.
Right, but the only way that you basically fix the problems is you have to basically acknowledge that it's your problem. For instance, poverty in America, and basically problems with the inner cities. You have to admit that those are our problems, and we have to fix them, even though they're Democratic, strongholds. And we, instead of just pointing at them and say, "Look, we can't do anything about this," we have. If you don't admit that those are our problems that we have to fix, it's futile basically. And the Republicans refuse to admit that that's their problem. That's their problem to fix, basically.
That's reasonable, but they can never fix it if they don't get elected. Then they're Democrat strongholds. Right. So
when Kennedy was president, I would have voted Democrat. But these Democrats, no way. No fucking way.
No, absolutely.
That's the thing.
Absolutely.
Do we have somebody that's a legitimate contender for the middle? Is there somebody out there that you guys know of that's like in the middle? I can't think of one person. I really can't.
No, absolutely not. I explained this. The Republican Party, it's going to have to start. The Democrats forget about it, right? Because again, if you have a moderate Democrat, they're not going to be able to transform the Democratic Party. It won't happen. Now, the only way it's going to happen is if you have a conservative Republican who basically expands, kind of like what Trump was doing, that expands the platform. Says, look, we have to expand the platform. Trump his original platform as a populist is a very expanded platform. You remember how many Republicans were against Trump when he first ran in 2016? You remember that? They were against him because he was expanding the platform. So you could get some, but again, it's too late. But that's what it would take. It would take somebody, a Republican that was somewhat conservative, who was trying to expand the platform to include basically these problems that I'm talking about, poverty in America.
Is that a DeSantis? I don't think so.
No, it's not. No, DeSantis is too conservative. It's not him.
Outside of DeSantis, who else is out there?
There's nobody. It's not going to happen. America's going to.
Exactly
that's
right.
why I say Trump was the trigger for dissolution. America is going to, by the end of this decade, is going to dissolve. I don't know how. One way or another, it's going to dissolve into something different. It's a transition point, and I think next year it's going to be pretty obvious.
Well, this is why I think this is the perfect time. Literally, I don't think there's been a better time in the last probably 60 years that for like a third-party candidate. I know we've tried it in the past, and you brought up Ross Perot.
Yeah.
The reality is, right now is the perfect time, really, for somebody that's like truly in the middle, a third-party, libertarian, kind of a, there's. If somebody were to come up over the next maybe 6 months, I think they'd have an opportunity to really take votes away from the left and the right, and I think that's what we need. But the problem is I can't think of that person. I just don't know who that is.
It's about the money. It's never going to work.
Yeah. That's a third-party candidate is definitely possible. But they won't win, right? They'll get, a small amount of the votes. They won't win.
Yeah, it's not possible until people turn off the television. The media has too much sway in public opinion, and they manipulate narrative too much. And as long as they always have their horse that they're pushing, that's so much constant, nonstop, in your face. Here's the news. Here's the information. It has a massive impact. And until people recognize the fraudulency of the media at large, et cetera, I don't think that any third party has a chance. But maybe here's a thought bubble for you. We take our current system. I think that our current system is the best that's ever existed. It's not perfect because inevitably everything always breaks down. You will always have corruption over time. But I do think that our founding fathers did come up with the best system, the best that they could. Things have changed. Things they never could have predicted had happened, but we still have the fundamental best system. But what if the system needs a hard reset every 100 years or 50 years or something, and then anything you've passed, all of your laws, whatever, you just kind of start over. Every generation gets a chance.
Well, that's exactly right. So, like I'll tell you guys this is an open forum. I don't give a shit. I'll tell you, I'm a gun owner.
Oh boy.
I believe in gun rights. I also believe that every drug should be legal. I think prostitution should be legal. I think that if you have a dick, you have nothing to say about fucking abortion. I mean, these are just like, I don't think I could be any more in the middle, right? We need to find a candidate like that. Somebody that's like, pro civil liberties, right? Like fiscally responsible, but a very liberal person when it comes to like the social policies. That's somebody that we can, that's the type of candidate that I would vote for. Unfortunately, you can't find that person anymore. It's all or none. It's literally all or nobody in the middle anymore. It's really fucked up, and it's sad.
Yeah, I think that, in my opinion, we can't save what we've got. It's going to collapse. I think what's more important is how we rebuild, right, or how we restructure and how we kind of make a comeback.
Where's the applause? Where's the applause thing? You get it. You're spot on.
Just saying, like, I think a lot of you guys, from what I'm hearing, a lot of you guys are very similar to kind of my, I would say we could all agree that we're all kind of in this kind of it kind of close to the middle. You know, like I said, I'm a pro the big topics. Let's talk about the big topics. The big topics are what? Gun ownership, gun rights. Okay, I'm a gun owner. Guns don't kill people. People kill people. I'm a big believer in that. Okay, this is where I disagree with a lot of the far left. When it comes to abortion, I don't think I have any say in abortion. Like, listen, if I don't have a vagina, like my wife and I talk about this all the time. I have you know what I mean? Like, let the women decide for themselves. Okay, and this whole thing. Here's where here's the problem. I think ultimately the problem is this: we get religion involved in a lot of politics, and unfortunately, the founding fathers, as somebody was saying earlier, there was a separation of church and state. But if you look at the far right and you look at the far left, it's literally that we get a lot of religion involved. And the problem is, let's keep religion out of it. Okay, keep religion out of politics. Okay, but that's very difficult because if you look at some of these like very far right people, you know, you look at the Bible Belt. I mean, these people are literally invoking Christ and God at every fucking, you know, every turn. It's unbelievable. You know, and listen.
It's on your money.
And I'm not saying you shouldn't be like a God-fearing person. You shouldn't go to church. Shouldn't be a Catholic or a Christian or whatever, Baptist, Protestant, Jew, whatever the fuck you are, Muslim. What I'm saying is, let's keep the politics. Let's keep the religion. And unfortunately, there's a blend, and that's one of the problems is we've like crossed the boundary, you know, where we're blending all this together. You can't do that. Otherwise, you know, we get what we get. We get these like, you know, left and right extremists. We don't have anybody in the middle anymore, you know?
Well, I don't think you can do that. You may separate church and state, but you can't separate church and the person, right? And if you have a free, open democracy that's truly free, you're going to have Christians or Muslims or whomever run in office and come into power, all right? And their culture, their religion is going to impact their policy, and that's not a bad thing. That's a good thing if you're truly free. And you're never going to separate that, right? And it's just like the left. Most of these people are, and you're painting with a broad brush, but they're atheists. It's like, how is that okay, but being a Christian's not okay? I mean, you can't start making distinctions like that. That's a dangerous path. I wholly disagree with you.
No, exactly, and that's the thing. It's like we got to keep we got to talk about the things that really matter. Which, you know, the religion aspect of things has to be put to the side. And I look, I went to a Catholic school. My kids have gone through Catholic school. I mean, the reality is, you know, I just think we need to separate that aspect of your life from politics, and unfortunately, it's very difficult to do. You know, Jim's got his hand up. What's going on? Let's go to Jim. Maybe he's got some insight for us.
Jim's got two things of one partial insight and one request. My request is that everybody puts their clock back an hour tonight, unless you live in parts of Arizona. And then my request to everybody is, I saw a billboard today from Cracker Barrel. Everybody knows what Cracker Barrel is. They have strawberry cheesecake pancakes advertised on their billboard. If anybody in the room has had them, would they please send me a direct message to say, go get them or stay away? They looked delicious.
They have an excellent blackened fish sandwich.
Well, if you see that billboard, I mean, they look great. Strawberry cheesecake pancakes.
Well, the Fed may not have pivoted, but
I think the room has a little intensity on that one, but we'll try them out.
You're fired.
As long as you get those pancakes after church.
But seriously, if you do a hard reset every 50 years or every 100 years, right? Every elected politician must go, okay? And you have to start over.
Isn't that the fourth turning? I mean, that's what we're going through right now. That's the big, you know,
That would mean Chuck and Joe would have to